Confirmed she would be the first woman to hold the position. Plus, the DAX gets its biggest makeover since its inception, increasing the index to 40 members, but with tougher rules on reporting and profitability. Good morning, everybody. Welcome back to the programme then. Just coming up to 8 o'clock here in London, looking for the start of the European equity trading session, and futures certainly suggesting we will open to the upside. There are some political pieces falling into shape, or falling into place, it would seem, in the United States that mean that markets just have a little bit more certainty to play with. The transition process from President Trump to President-elect Biden seems to be getting underway, and the White House seems to be acknowledging the need to do that, and that seems to be fairly significant in the market's thinking. Also, consideration being given to who President-elect Biden is going to have around him, what kinds of people, what kind of Treasury Secretary, with what kind of attitude towards fiscal spending and concern around inequality, and certainly that is part of the conversation. What freedom the Democrats will have, though, given the makeup of the Senate, is another complicating factor. So European equity markets, with all of that in mind, getting underway, moving to the upside, up 0.8% on the Stoxx 600. The FTSE 100 up by around 1%. The CAC 40 opens up by more than 1%, as does the IBEX over in Spain. As we heard from our colleague Danny Berger earlier, we were looking for some key names in the pharmaceutical space, certainly around share buybacks in Switzerland, and for AstraZeneca as well, looking to see whether our reporting around severe COVID, whether that will move at all the AstraZeneca share price. I can tell you that that one is up by 1.8%. Novartis in Switzerland up by 1.4%. So that's a bit of a focus this morning. But the broad picture story is around US presidential transition. European markets opening higher. That is as the Biden transition gets formally underway. The president-elect is planning to nominate Janet Yellen as Treasury Secretary. She spoke about the need for fiscal stimulus at Bloomberg's New Economy Forum earlier this month.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
That was Janet Yellen, of course, making the important point that the Fed can't do everything. Ben Gutteridge, Invesco EMEA Director of Model Portfolio Services, joins us now. And Ben, what's interesting about hearing Janet Yellen make that point, of course, her experience at the Fed, leading the Fed. But now if she finds herself not using the Fed's tools, but using a totally different toolkit, if she finds herself at the Treasury and able to move policy in the fiscal direction, does that increase your expectation for what can be done, or what will be planned to be done, at least fiscally, in the US?
Well, it was a pretty emphatic statement and what a voice of authority on the subject. So I think at the margin, yes, it does encourage us that a meaningful stimulus package can be put together. But I say at the margin, clearly Janet Yellen's appointment doesn't alter the mathematics in Congress. And so Republican senators are still likely to behave in keeping with their ideology and be a bit more obstructionist to a larger package. But at the margin, yeah, I think the market's right to cheer this news.
And what do you make of the need for it? I mean, we've talked about fiscal stimulus a lot. We talked about it a lot in the run-up to the election when everyone was talking about whether there'd be a blue wave. it seemed to be September's big theme, didn't it? And into October as well, whether we'd see that big wave, that was good for risk assets, it was negative for the dollar. But now we've got more data to play with. I wonder if the thinking is evolving. So US November PMIs coming through, and for some people suggesting that there isn't quite the need for fiscal stimulus on the scale that maybe the Democrats had previously been talking about. Others disagree. What would your thinking be around some of the better data we see coming out of the US and how that changes the fiscal narrative?
Well, you're right. Some of the data does support the more hawkish elements in Congress, but I think the aggregate data and the forward-looking data does suggest stimulus, and quite a reasonable scale stimulus is still needed. I mean, you sort of look first to the COVID data, and it's really quite troubling in the US. Of course, we have fantastic vaccine news as we look into sort of spring and summer next year and what that can do for the economy. But between here and then, the US economy, US consumers likely to be really under some strain in the absence of any fiscal stimulus. So I don't think the need for a scaled package, a reasonable sized package, has gone away, and which is why I think it's sort of good news that Janet Yellen is going to be campaigning so hard for it.
Do you think, Ben, that the US consumer looks challenged at this point, or will be challenged through the winter then? Is that going to be the piece of data that people rely on to assess what more needs to be done on the fiscal front?
Yeah, well, thanks for teeing me up on the consumer. I should have mentioned in my last answer, actually. As I said, the data is mixed. There's something for the hawks, but there's something for the doves in there as well. I mean, retail sales were pretty weak, pretty disappointing. We see the savings that have been accrued through the summer as a result of the CARES Act, the fiscal stimulus. That's going to start fading as that's sort of spent to maintain spending patterns and standard of living. And so the US consumer, faced with depleted savings, but also a more worrying societal rate of infection, I think is going to see consumer confidence dip, and that be reflected in some of the sort of retail leisure type data. So I think the consumer, not such a rosy outlook in the short term.
Yeah, so if that's the backdrop then, and this conversation is starting on the US, but thinking, I suppose, about your portfolio now then, Ben, if that's the backdrop, what does this mean for any pivot based around vaccine news away from technology, working from home stocks, and into value, travel, leisure, banking, and other areas? Where do you stand on that debate at this point?
Well, I mean, that is the question to ask. I mean, there's some subtlety to the answer in that we are moving towards that reopening trade as we see the fantastic data from the vaccine and the platform that gives the economy to reopen, and those beaten down sectors, in leisure and retail, to perform. But offsetting that, we've talked about some of the growth challenges that lie ahead in the short term, and of course the pandemic has really sort of cracked open, I think, some old spending habits and accelerated those secular trends towards, online purchases, e-commerce, the digitalization of everything. So the reopening of the economy wouldn't necessarily mean that we all sort of rush to the shops. Maybe we're a little bit more sort of a germaphobe about it. And also we'll have enjoyed the luxury of online spending. So I think on balance, we still retain favour for the growth sectors, but at the margin, the move is towards those value beaten down sectors.
Ben, we'll get more of your thoughts on this very subject shortly. Ben Gutteridge, Invesco EMEA, Director of Model Portfolio Services. Ben stays with us. As I say, we'll get further thoughts from him with regards to how you position the portfolio at the moment, given the vaccine news flow. Coming up on the programme, IATA sets to work on an app that could streamline post-COVID travel. But just how is the industry going to fare until then? We discuss. This is Bloomberg.
that we do have vaccines available within the near future is a very positive thing for the industry. Then we need to look what are the local rules and regulation and legislation country by country by country. And I think the vaccine will definitely help to restore confidence in travel. I think it's a bit premature now to say whether it should be mandatory on board of our flights or not.
Those comments then coming as IATA revealed that it is working on an app-based travel pass which will link passengers' test results and vaccinations to an electronic copy of their passports. Travellers will be able to present a QR code to border authorities, allowing for shorter quarantines. But of course, the vaccines need approval first. Ben Gutteridge, Invesco EMEA Director of Model Portfolio Services, is still with us. This is just one example of how one part of the economy, a really beaten up part, the aviation sector, Ben, is trying to deal with this themselves, trying to put in place plans around vaccination. What are you doing with exposure to some of those most beaten up sectors then? We talked about this a little bit. Are you wholesale ready to get into leisure and travel stocks, or are you just adding a little bit of that around your other holdings?
Well, we are adding a little bit of it, if you like, recognising that some of these beaten down sectors actually don't need a tremendous amount of recovery in order to realise some of the value that lies within them. Clearly very cheap stocks that will need a catalyst, and of course we have it loud and clear in the form of a vaccine. It's the degree to which those stocks can run, however, that gives us caution in relation to getting sort of full pedal to the floor in transitioning a portfolio across to those types of sectors, as we worry about perhaps some over-enthusiasm as to the speed to which an economy may return to sort of quote-unquote normal or past behaviours in terms of willingness of not just consumers, but of course businesses to sort of spend on travel and long-haul flights and such. Mm.
Yeah, we certainly had some cautious words from the chief scientist at the WHO early on in the programme, Ben, about how long we're going to have to live with this pandemic for. I noticed that you, as well as being talking about taking on some more exposure to leisure and retail stocks, you also like healthcare. And I think it's interesting because the better news we get on vaccines, the more people seem to pivot away from healthcare. And so the companies that are delivering these incredible achievements for humanity, maybe not rewarded, or is the picture more complex than that? What is it about healthcare that you like?
Yeah, well, I mean, I guess the headline acts in relation to the vaccine, I think markets and investors would be sort of looking beyond that, wouldn't really necessarily be chasing those players, but would be looking through. Now, clearly, there's a great willingness to sort of spend and great need to spend in this sphere to, protect humanity. And the valuations clearly haven't got as stretched as they have in some other growth areas. And you think about technology, a sector we like, but clearly healthcare not as expensive as that sector. But in relation to the vaccine, clearly there is some concerns and regulatory concern about drug pricing. And, you may actually get a bit of a reprieve for this sector, not only because of the difficulties to pass policy in the US Congress, but of course what they've done in relation to the speed of delivery of the vaccine and the testing and also all associated sort of medical procedures in the face of this, wretched virus. So there's a bit of sort of goodwill, we would have thought, for the sector from a regulatory level. So there's good earnings growth, decent pricing, and not such a regulatory cloud that, keeps us enthused for the sector.
Mm. That's an interesting thought, isn't it, about the goodwill involved there, and certainly a share buyback from Novartis helping the sector today. Let me ask you about value stocks then, Ben. So when you want to get involved in value stocks, are you looking to the sort of poster child banks, or do you not think the yield curve is steep enough for that? Do you look to other parts of the value space to get involved?
Well, we'll have a sprinkle of everything because investing is difficult, and clearly there is upside to the banks. They're looking pretty cheap. The growth outlook outcomes could be far better than we're anticipating, which would encourage a steeper yield curve and be great for bank interest margins, less loan loss provisions. That'd be a great backdrop, or a very good backdrop for the banking sector. However, it's not quite in our core view that we do get a steeper yield curve. Even in the face of better growth outcomes, it appears as though the central banks are pretty committed to sort of anchoring interest rates, certainly long-term interest rates. And it's difficult for that interest margin story to really capture the imagination, I would have thought, of investors or excite investors. Yes, there's other good news supporting banks, as I said, such as valuations, but it's hard, it's difficult to get overweight that sector given that backdrop. So given we are getting more excited about a reopening trade, it's more sort of industrials and, I guess a bit of sort of leisure and retail at the margin as well. But for banks, we're a little bit more cautious.
Okay, so more industrials, a bit more cautious on banks. Where does that leave you on tech then? Because clearly that's been such a strong trade for 2020. Is it US tech that you favour, some of the lesser mentioned European names perhaps, or do you go to Asia and Chinese tech and thinking about the global regulation urge and where that's got to?
Well, I think we would go everywhere for our tech exposure, but you would predominantly lean into the US and thereafter Asia, some way behind then Europe. Clearly, we think these have been great beneficiaries of the lockdown trade. And as we look to the reopening tailwinds, of course, checkered to a degree, as I said, by sort of escalating COVID data and worries in the short term about the absence of the fiscal stimulus. So it's not a clear cut, it's not a slam dunk that tech takes a bath in the next few months, but clearly there are challenges. But beyond that, we look to the sort of secular growth story and the trends of consumers and businesses, and it still supports the tech sector. Of course, valuations are a concern, but in the absence of tighter monetary policy that really is some distance away, it's hard to see these valuations coming under pressure, and indeed they're sort of well supported. So we like the tech sector globally.
Thanks so much, Ben. Really good to speak to you. Ben Gutteridge, Invesco EMEA Director of Model Portfolio Services. Ben will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. So that's where I head straight after this programme. Let's get a Bloomberg Business Flash for you. Some of the top corporate stories that we're covering today at Bloomberg. Carsten Block of Muddy Waters says he believes Chinese live streaming company Joy is worth nothing. The short seller is accusing the firm of acting fraudulently, saying the majority of its revenue is fake. He's calling for stricter rules. The company, of course, has pushed back against his comments.
If we can't regulate them and they're ripping us off, and it's easy to find these case studies just, tick by tick where they're ripping us off, we need to delist, because otherwise this is a total joke. And what's the point of the market?
And as I say, Joy rejects the allegations. Last week it said it believes Muddy Waters' report contains numerous errors and that the short seller lacks an understanding of Chinese live streaming. The UK is considering banning the installation of Huawei's 5G technology as soon as next year. Bloomberg sources say that's to appease lawmakers pushing for tighter restrictions on the Chinese telecoms giants. We're told a ban on the parts could increase costs for BT and Vodafone and force them to speed up an overhaul of their networks. That is your Bloomberg Business Flash. Coming up on the programme, the transition begins. Joe Biden is formally designated the apparent winner of the US election, allowing preparations to move forward. This is Bloomberg.
markets don't like uncertainty. They like certainty. They know what they're likely to get with Janet Yellen as the Treasury Secretary.
Most important agenda for a Treasury Secretary now is the economic recovery, and she is an economic recovery specialist.
As Treasury Secretary, she has far less autonomy, for lack of a better word, to control the narrative the way that she did at the Federal Reserve.
I'm hoping Janet Yellen takes a page from good Treasury Secretaries like Jim Baker or Robert Rubin, even Alexander Hamilton, get a musical play named after her.
She would be inheriting this Treasury position at a really difficult time for anybody in that position. So we're far from over. These are sobering times for banks, for the markets generally, for individuals and corporations.
She's going to be much more subject to the political winds in Washington. And for all her esteemed accomplishments, I don't know that we know how well she can navigate those political waters, choppy as they may be.
The financial markets, banking, regulatory, these have never been her forte. Remember, she's a University of California, Berkeley trained labor economist. And I think that is where the greatest appeal is.
Those are some of our guests commenting on Joe Biden's decision to nominate former Fed Chair Janet Yellen as Treasury Secretary. Really fascinating comments there. She would be the first woman to hold the job if indeed it comes to pass. This comes as the official transition to a Joe Biden White House finally gets underway. Donald Trump says he's instructed his team to start the process after the U.S. agency in charge acknowledged Biden as the winner of the U.S. election. Joining us now is our senior economy reporter, Michelle Janrisco, who can talk to us more about the pick of Janet Yellen for Treasury Secretary. How is Yellen going to be received by markets? How typical a choice is she for Treasury Secretary then, Michelle?
Yes, good morning. I would actually think that she's pretty atypical in a lot of ways, not just being the first woman in the post, if confirmed, but I often think of her not as a creature of Washington politics. It really strikes you when you meet her. I think of two A words that a lot of people have been using about her, and that is academic and apolitical. We know that she, of course, had a former professorship at UC Berkeley. She's a celebrated labor economist in her own right, aside from her work at the Fed, and really apolitical. I like how our international economy editor, Kathleen Hayes, put it earlier today, saying that Yellen isn't seen as pro or anti-bank, but always trying to ensure the health of the banks, which is a welcome message, I think, to markets, especially who are looking for more stability from policymaking these days. And here you have someone who has been through a crisis, who has navigated the aftermath of the global financial crisis from the U.S. side. So she's very familiar with the sorts of tools and things that need to get done. We do see, of course, some positive initial market reaction, and we're hearing voices from across the political spectrum. My inbox is full of economists, including some more on the right-leaning side that appreciate this pick. And former Trump team member Gary Cohn has also welcomed it as a smart choice. And it's notable that she would be a rare Fed chief to assume the role. I think, we've had some who have come from the Fed. Timothy Geithner, of course, is one that was at the New York Fed. But previous to that, there are just two Fed chiefs in history who have served as Treasury Secretary also. So aside from her Fed chops, she's also been able to avoid some of these lines of criticism that some of her would-be predecessors have had on the job. I remember from reporting in Washington, there was some criticism around Hank Paulson for being too cozy, given his time at Goldman Sachs with the markets. And then Jack Lew, of course, under the Obama administration, was seen as lacking foreign policy experience. So that's certainly not a weakness of Janet Yellen having been at the Fed.
Okay, she's still going to be busy, isn't she? What will the priorities be then in the administration? A lot's been made of the comments she's previously made around fiscal stimulus.
Yeah, of course. I mean, and that's the interesting part, too, is that, of course, she's been joining this chorus of central bankers and former central bankers across the world that are saying, we've done all this heavy lifting and fiscal policy has not done enough to kind of carry the load in this economic recovery. Certainly hear that on the U.S. side. And so now, President-elect Biden is now handing, Janet Yellen the power to make her mark on that issue, to be involved perhaps in negotiations on the Hill over further stimulus on the U.S. side. And another thing that we've mentioned, and we posted this on the Markets Live blog earlier today, is she's likely to get her hands dirty on some of these inequality issues. She talked often when she was head of the Fed about, lamenting that central bankers don't have that power to get at certain parts of the economy that are most vulnerable, that's really a fiscal policy thing. And now she will have that power. And so she might get involved in tax policy and regulation and the like, and that could provide some more excitement for markets in the future.
Yeah. It's a good story already, isn't it, Michelle? We heard one voice earlier on talking about the possibility of Yellen the musical. I wonder if Lin-Manuel Miranda is working on that one already. Certainly, such a CV. It's going to be interesting to watch. Senior economy reporter Michelle Jamrisco with the latest on Janet Yellen. Up next, bigger and stricter. The DAX is undergoing its biggest makeover since its inception. We will break down what is changing. That conversation coming up next. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into Tuesday's trading session and things moving to the upside. A little bit more certainty politically in the US seems to be adding to that risk-on movement this morning. So the Stoxx 600 up 0.7%. The IBEX and the FTSE MIB make decent gains at the periphery. Both of those up by more than 1%. Let's get to the individual movers. Some of the stocks we've been keeping an eye on. IAG is an important one to track in the travel space. That stock up by more than 5%. England is cutting the quarantine period for arrivals from those countries it deems to be high risk, and so that is pushing that stock higher. H&M has been raised to buy a Goldman, and that stock is up by just shy of 4%. And keep an eye on Pets at Home. That stock down by 9%. The company is saying that it sees its full-year underlying pre-tax profit in line with the prior year, and perhaps when everybody you know is getting a dog, that is not enough. That is where we are on these movers then. Pets at Home, as I say, down by just shy of 9% this morning. Let's get a First Word News update. Some of the top stories that we're covering here at Bloomberg. back to that story that I mentioned that is driving some of the momentum behind IAG. England's national lockdown ends next week, but Prime Minister Boris Johnson says it will be replaced by a tougher three-tier system of regional restrictions, which will last until the spring. Hairdressers and gyms will be able to reopen, but in areas under the tightest curbs, restaurants will be takeaway only. More details are due on Thursday. The surging coronavirus is stoking fears of a fresh downturn for the world economy. It's heaping pressure on governments and central banks to unlock even more support. Wall Street economists say it wouldn't take much for the US, Euro area and Japan to contract again, either this quarter or next. Joe Biden's transition team says the president-elect plans to name John Kerry as his climate czar. The former Secretary of State is a Washington veteran and helped broker the landmark Paris deal. He says climate change is an urgent national security threat. Global news, 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Let's focus on the German DAX. Germany's DAX benchmark is about to undergo its biggest overhaul since its inception in 1988. This morning, operator Contigo announced new rules for inclusion in the DAX. It will now be bigger and it will be stricter, tougher to get in then, Danny. Danny Berger joins us with the details. What changes are we going to see on the DAX, Danny?
Well, yes, it's going to be bigger. So specifically, it's going to 40 companies from 30, and the mid-cap index is going to be smaller, going to 50 companies from 60. Now, in terms of who gets included in the DAX, some of their new requirements include 2 years of profitability. This is going to start December 2020 for new entrants. So that means current members like Delivery Hero who aren't profitable are grandfathered in here. It also will require quarterly and annual audited statements. Most companies already report quarterly statements, but they're really just codifying this, saying that if companies don't report within 30 days, they can get kicked out of the benchmark. This is something crucial, swift exit for non-compliant companies. They also say that companies need to keep up with certain requirements, and some of those requirements are governance related, including staffed audit committees. But for companies who are in the DAX that don't currently have one, they do have until 2022 to do so. So there is a little bit of room to get compliant with the new rules that the DAX is now announcing. I should say they've also rejected one of their proposals to exclude companies that have exposure to controversial weapons. Contigo and Deutsche Börse saying that the participants really question whether such a requirement has a place in the German benchmark index, instead saying that they're really focusing these ESG efforts in their ESG specific indices, Anna.
Yeah, thanks. Danny, just let me take us on to another thought, which is around Wirecard and the role that this plays in the rethinking of the DAX. How much of this, do you think, is a reaction to what we saw at Wirecard and the embarrassment, I suppose, that goes with that?
I really do think that Wirecard was the spark here that caused them to implement these changes, because looking at the new requirements, a lot of it is if you don't meet the new requirements, there's a speedy exit from the index. And that was one of the issues with Wirecard. It had 2 years of alleged accounting issues. And then for 2 months when the company was insolvent, in a first, it still was in the DAX. The DAX didn't really have any means for excluding it from the index. So this will sort of give it the power when it does have these sorts of controversial companies or really an insolvent company, it will have the means to pull it out from the main index, Anna.
Danny, thanks very much. Danny Berger with the latest on the changes at the DAX. And the DAX may have decided incorporating ESG criteria on its constituents is a step too far for now. But the money is still flowing into the broader ESG sector. A new report from Octopus Group claims that institutional investors are set to double their allocations to renewable energy in the next 5 years. Let's bring in Chris Hullett, Octopus Group co-founder, who joins us now. Chris, really good to speak to you. So you've surveyed institutional investors and you've seen what they plan to do, double their allocation to renewables. I wonder, does this take into account the changing administration in the US? Is there room to allocate even more if we see a more favorable US administration in terms of climate policy?
Well, good morning, and thank you for having me on the programme. And I think you're absolutely right. This survey was actually carried out prior to the US election, and I think it's absolutely been a feature of the last few months that people have been worried, what would the US approach to climate change be? I think the election of Biden and the appointment of John Kerry as the climate czar is a really good sign. One of the key issues that institutional investors have told us has been a bit of a blocker towards growth of renewables, has been the lack of collaboration and cooperation amongst governments. Governments have got a really important role to play in terms of setting the right kind of tone, setting the agenda for how sectors are meant to develop. And so I think we're going to see increased cooperation going forwards. The US is going to come to the table. It's going to play an active role in COP26 now. I think that's going to be really important as the UK in particular moves into a pivotal year with the G7 presidency, with COP26 now only about 11 months or so away. That global collaboration and cooperation is going to be so critical to crowding in the trillions of dollars of private sector capital that's going to be needed to really fund the global rollout of renewables over the next couple of decades.
And your research also picks up on another important dynamic to keep an eye on, Chris. You talk about how COVID has slowed the pace of divestments away from fossil fuels. That seems a little surprising, given that this year we've seen negative oil prices, which is not something that anybody thought was going to happen. We've seen real big cuts to dividends. What explains this slowdown in the pivot away from fossil fuels, do you think?
Yeah, it's a pretty slow effect so far. It's a fairly marginal change compared to the data from last year. I think there's a couple of features here. One is, I think, a little bit of an artifact in the data in the sense that many oil company shares have fallen so much over the past year that when you look at the impact that selling out of a position in one of the oil majors would have on your portfolio, the percentage impact this year will be smaller than last year. But the other factor at play here, I think, is that particularly in Europe, some of the oil companies have come out with their transition plans. We've seen businesses like BP announce pretty ambitious targets around migrating from hydrocarbons towards renewables. And so I think it's also the case that some investors that perhaps may have thought that they were going to be divesting from oil and gas stocks may be willing to give some of these names a second chance and stick with them on the belief that engagement with those companies is likely to lead to better outcomes than divestment. But the important thing that we've also seen, though, is that institutions are really... Sorry, go on, Anna.
I was just going to say, how do you cope with that change by oil companies then, Chris? How do you cope with that change by oil companies? You know, oil companies now, they're not oil anymore only, are they? They're big energy businesses. In some cases, they look more like utility companies. Just this morning, we heard from Shell signing a 15-year supply agreement with Dogger Bank UK wind farms. You know, some of these are energy businesses in a much broader sense. How do you, as investors in that kind of green energy, cope with this transition that we're seeing from big oil?
Well, we ourselves are big investors directly into solar and wind farms, but for many investors focused on quoted markets, absolutely the decision they've got to make is how do they interpret the transition that the oil and gas stocks are going through? I think for a business like Shell or BP, that migration is really difficult. They're talking about managing big debt loads, shareholders are expecting dividends, existing hydrocarbon assets that will need ongoing capex, while also finding the money to, as you say, migrate into areas like offshore wind. That's a really, I think, quite a difficult thing to juggle. It's going to take them many years, decades to achieve. The thing that we saw in our survey was for many investors, what they really want is also to be able to get direct exposure to renewable assets. And that, I think, is one of the choices investors make. How do they allocate? Do they choose to get it through businesses in the old economy that are repositioning, or would they prefer more direct investments? Topics like liquidity came up in our survey, issues like government cooperation and collaboration, and also energy price risk. And those are the sort of things that investors have on their minds when they think about the renewables sector.
And Chris, in a world of very low interest rates, investors are looking for returns in anywhere they can find them these days. And to what extent do investors see this renewables asset class, if we can call it that, as uncorrelated, as structurally on the move, rather than correlated to the cycles that we witness elsewhere? Does that work its way into their thinking?
It absolutely does. It's a feature that's been quoted by 86% of the people we asked in our recent survey. And I think that's perhaps not surprising. So many asset classes have seen income levels dwindle, fixed income mostly yielding barely anything. So for many investors, the uncorrelated nature of returns from renewables is really important. The fact that these are cash flows that you can see visibility for years, decades in the future, the predictability of those cash flows, it's got a really important role to play. And those kind of mid to high single-digit return levels that you can generate from renewables, I think have been latched onto as being increasingly attractive. The other key aspect is that this is a sector that you can now invest into at real scale. 5, 10 years ago, you couldn't. And so for investors looking at this asset class now, they can make meaningful contributions, meaningful allocations in a way that you just couldn't. Investors have told us that on average, they're looking to double their allocations over the next 5 years, something which I think is going to be an incredibly significant part of reallocation of global capital. The sums required are really staggering. It's going to take trillions of dollars, roughly equivalent to the entire market cap of the London.
Chris, thanks very much. Thanks for joining us. Chris Hullett, Octopus Group co-founder. Thanks very much for bringing us your thoughts. 8:41 here in London, 9:41 in Paris and Berlin. Up next, the future of work. Has COVID-19 accelerated investment into automation, or have cash-strapped companies been forced to put plans on hold? We'll discuss that next with the CEO of UK AI company Blue Prism. This is Bloomberg. Welcome back to the European market open. 44 minutes into the trading session, European stocks head higher. A little bit of political certainty in the US is helping drive them upwards. Now, the pandemic has fast-forwarded tech trends from online video conferencing to food delivery. But what about business investment and adoption of new technology? Has the pandemic been an accelerator for the robotics and artificial intelligence movements, or have cash-strapped firms put automation projects on hold? Let's speak to Jason Kingdon, the Blue Prism Group chairman and CEO, whose business operates very much in this robotics and AI space. Jason, good morning to you. How resilient has the business been then? I suppose it could be sector dependent.
Yeah, very much sector dependent. And so, you know, if you take Blue Prism's digital workers, we operate across over 70 commercial sectors now. And for some of those sectors, you know, we've seen almost the cessation of doing business. So very, very dependent in terms of where people are operating. But I'd also say that, you know, the pandemic overall has slowed business down. People have got cautious. People are worried where the economy is going. And against that, you know, they're making judgments in terms of what investments they should make.
And what size of business, Jason, can benefit from this kind of automation, robotics and AI, the imitation game, as it's often sometimes referred to? How sizable, how much scale do you have to have as a business to benefit from this?
No, I mean, this is across the board. This is all sizes of business. And so, if you take Blue Prism's core product, it's a digital worker, and it's something that we try to get as close to a human worker as we possibly can. And, what that means is that it's an automation platform that's universal, will automate any task that a human is able to work. And it can be applied in all sorts of contexts. And so, the large consumers of it, I would say, as seeing this as an alternative to offshoring the kinds of tasks that they were putting across, halfway around the planet before. Now they see this technology as an alternative to that. And so, large scale users are on that kind of scale. But, small businesses too, they also use the technology.
I know that you have been working with a whole number of sectors, Jason, for many years, but healthcare very much in focus, of course, this year for understandable reasons. You volunteered a task force of software robots or digital workers to help allocate ICU beds, to distribute PPE and the like. Did you really get any take-up, or in the heart of a crisis, do those who manage healthcare not have the capacity to invest in that kind of technology?
No, well, I mean, that's the at the core of this particular RPA movement. We're making this technology very accessible to business users. That's absolute kind of fundamental principle of it. So that a business user, just in the same way that you can work with a human colleague, you can work with this technology. That's the real idea of it. And absolutely, we got very much a take up, not just in healthcare sector, but also the financial support packages as well. So, the support loans that you saw, both UK, the US, delivered through digital workers, coordinating, operating across multiple systems in order to make those happen. And in the UK, we actually saw health trusts sharing trained digital workers. So they would set out a workflow that gets automated by a digital worker, and then they would then share that across trusts in terms of the way they can make use of it. So no, I think it was a big eye opener in fact, in terms of how flexible this technology is, how far it's come along, and really what a viable alternative is now to human beings.
And Jason, you're a listed business, you're AIM listed, of course. There has been a suggestion from one short seller, at least, that you've seen a deterioration in your performance. How do you defend yourself against that kind of reporting?
Well, I think, in the context of COVID, everyone's concerned about all businesses in terms of where they are and what they're doing. But, I think that with the results that we reported, 40% growth year on year, a business that's still investing, but, we burnt £3 million over the second half against a cash stockpile of over 135 million. We had 147% growth on our cloud platform of our digital workers. So, I think it's actually a very, very solid performance. And I think it's also, testimony to that. We just had an award from Deloitte for being in the top 150 high growth businesses in the US and in the top 50 for the UK. So I think it's a very, very strong performance against what, is undoubtedly the strangest business environment any of us have operated in.
Yes, strange is certainly the word. Jason, you automate then processes that take place in service industries, and you've made the argument in the past that these digital workers actually expand the economy, so not necessarily taking jobs away from humans who, let's face it, many of whom have been unemployed by the current crisis. You say they're economic agents in their own right, these software robots. How is that the case?
Because, as I say, we're trying to get these things as close to a human worker as possible. And one of the aspects of that is that they use third-party applications. They use, third-party software, and they consume it. They consume it in exactly the same way that a user does. And so it means that more licenses are required, in terms of core databases. If the digital workers are expanding the work that they're doing, the kinds of products that they're shipping is expanded because it's things that they're offering. And so effectively, it is like a new economic agent operating within the business. And I think this is one of the things that's actually overlooked with AI. It's a contributor. It makes things happen. It's an economic agent, and I think that's very different from technologies that we've seen in the past.
Interesting to speak to you this morning. Thanks for joining us. Jason Kingdon, the Blue Prism Group Chairman and CEO. Thanks very much for your time. Up next on the programme, how do markets price Janet Yellen going to the Treasury? That seems to be the market's expectation now. Based on our reporting, we will put that question to Market Live's Christine Aquino. That conversation next. This is Bloomberg. Welcome back to the European Market Open, 54 minutes into a trading session that's broadly positive, lifted by some political factors from the United States. Let's talk about those with Christine Aquino, who leads our Markets Live team in Europe. And it does seem the removal of some political uncertainty boosting sentiment. How long does that last then, Christine?
Well, if it lasts through the year end, Anna, I'm sure investors will be very happy about that. But we know that that never works out that way. But I think at the moment, markets are just really happy to enjoy this moment of certainty for as long as it lasts. As you say, we have removed a number of stumbling blocks potentially ahead for investors pertaining to the U.S. administration transition and, of course, the makeup of Biden's cabinet, and particularly the news that Janet Yellen will be appointed to the Treasury is being taken particularly positively in markets today.
Yeah, we're seeing some risk assets on the move as a result. Just briefly, the Janet Yellen move, what are you hearing on the Markets Live blog about that?
Yeah, I think the consensus is that it is positive in that it gives traders and investors certainty. She's an insider and she's an experienced hand, so that much is being taken positively. The question would be how she navigates the political aspect of the role, given that she's transitioning from central banking to a role that is probably more political in that sense, and so that would be interesting to watch.
What about, well, in fact, let's leave the conversation there, Christine. Thank you very much for joining us. Really good to get your thoughts. Christine Aquino running us through the markets thinking, equity markets pushing higher, risk assets pushing higher, and a bit more political certainty coming through from the US. That move for Janet Yellen to be appointed Treasury Secretary being greeted by markets with what seems to be quite a lot of enthusiasm, certainly a very known entity when it comes to being a market participant, to say the least. That is it for the European Market Open. Stay with Bloomberg Television. Up next, Bloomberg Surveillance. This is Bloomberg.
Three weeks after the presidential election, Joe Biden is formally designated the winner. The transition process can begin. Stocks and futures climb. The dollar slides. From the Fed to the Treasury, Biden looks set to nominate Janet Yellen, a supporter of more fiscal spending, as his Treasury Secretary. She was the first female Fed chair. If confirmed, she'd be the first woman to head the Treasury. Plus, the DAX gets the biggest makeover since its inception, increasing the index to 40 members with tougher rules on reporting and profitability. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, straight to the markets, because we did have quite interesting and big political news over in the U.S. That started late last night, overnight. And first, we know that the transition is more on its way than it was just 24 hours ago, and you can see that global stocks are advancing on the back of that. Now, if you look at what stock markets are taking a positive, the General Services Administration acknowledged finally that Joe Biden was the apparent winner in the presidential election, and the move seems to, of course, reduce political uncertainty in the U.S., giving Biden and his team access to current agency officials, briefing books, some $6 million in funding and other resources, and the markets seem to like that. So I'm looking at energy stocks leading the stock 600 here in Europe, travel companies, banks also notching gains in broad advances, haven assets weaker. And then we're getting some IFO figures. I'm looking forward to speaking to the president of the IFO Institute shortly. November German current assessment index is at 90, so that's a touch better than the estimate of 87.5 than we had. Clement Fust of IFO coming up in 15 minutes. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. England's national lockdown ends next week, but Prime Minister Boris Johnson says it will be replaced by a tougher three-tier system of regional restrictions, which will last until the spring. Hairdressers and gyms will be able to reopen, but in areas under the tightest curbs, restaurants will be takeaway only. More details are coming out this Thursday. Now, Bloomberg sources say President-elect Joe Biden plans to nominate Janet Yellen as Treasury Secretary. The former Fed chair would be the first woman to serve in the role. She's a candidate that's likely to find support from both Wall Street and progressives. No official comment from Biden's team yet. The surging coronavirus is stoking fears of a fresh downturn for the world economy. It's heaping pressure on governments and central banks to unlock even more support. Wall Street economists say it wouldn't take much for the US, Euro area or Japan to contract again, either this quarter or next. And global airline lobby IATA is working on a mobile app to help travelers demonstrate their COVID-free status. The travel pass will display test results alongside proof of inoculation. A trial program will begin with British Airways parent IAG this year before arriving on Apple and Android devices in 2021. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the formal transition of power between President Trump and President-elect Biden has finally begun 3 weeks after the election. A key government department has now acknowledged that Biden is the apparent winner. Now, President Trump has called on his agencies to cooperate. Still, he says he'll continue to challenge the outcome of the election. Well, joining us now to talk about this is our senior editor, Derek Wallbank. Derek, what is the significance of the GSA finally acknowledging that Joe Biden is the apparent winner?
Well, the biggest significance, frankly, is that Biden and his team get access to security briefings. They can go ahead and start some of those conversations and learning some of the intelligence that they don't have as just members of the general public. So I think that's part of it. I think, there are some other benefits like having a .gov website. You can, start going through security clearance processes, things like that. One thing that usually would be a big deal, but it's probably a little bit overrated now, is some of that contact with Trump administration officials to sort of figure out what the Trump administration is doing. And the reason that's partially overrated here is that the Biden administration in large parts wants to do absolutely nothing that the Trump administration is doing. And so I'm not necessarily sure that they'll be too heartbroken that that's not going on quite so smoothly yet.
What do we know about the administration? So who's in, Joe Biden's cabinet? It seems a lot of familiar names that we know about already.
Yeah, well, that's true. You know, and Biden started out with national security, and there you're talking about a lot of names that are sort of experienced old hands. John Kerry as a climate advisor, you know, things like that. Anthony Blinken as Secretary of State, longtime Biden advisor. The name that's making a lot of waves now is Janet Yellen, who reportedly is going to be named the Treasury Secretary. Now, of course, I don't think that any Bloomberg viewer needs an introduction to Janet Yellen, but that's precisely the point. Biden campaigned in a lot of ways on this sort of return to normalcy of this idea of putting experienced, stable hands, the suggestion that maybe politics could be boring again. And by putting in a name like Yellen, who you kind of know where she stands on a lot of different things, the Biden administration incoming is signaling both a little bit of stability, but also a little bit of predictability, and both of those things have been in somewhat short supply the last 4 years.
Derek, very quickly, I know we're expecting a couple of news on, the Pentagon and things like that. Is there anything that, is there any appointment that could be controversial, or what's the key appointment for Biden that's still to come?
Well, I think the key to controversiality lands with those Senate elections in Georgia, and realistically, when you are talking about these confirmations, generally people defer to the incoming president. But we've seen an absolute acrid partisanship in Washington over the last couple of months. Certainly, this transition has not been easy, and it's taken Republicans a long time to even call Biden the apparent winner. So I think that if Chuck Schumer, the Democrat out of New York, is the majority leader, even if by the narrowest of possible tie-breaking margins, it's going to be a lot easier for Biden to get his people in. But right now, I'm not necessarily seeing a lot from the Biden folks pushing really, really controversial names. They seem to be really hewing towards a lot of mainline choices that would have bipartisan appeal.
Thank you so much, Derek Wallbank there, our senior editor. Now joining us this morning, Melanie Baker, to talk, of course, about the markets and the impact that these appointments have. She is senior economist, and it's a great pleasure, really, to speak to Melanie about all of the things that is going on as senior economist at Royal London Asset Management. Melanie, great to have you on the program. When you look at how the markets and the economy could fare because of these cabinet picks, who's in Joe Biden's administration, what's your key takeaway? Are we going back to what we had, pre-President Trump, and is that only a positive for the economy?
I think, what we're seeing are appointments that have, that speak to competence, highly experienced people coming in, and I think from an economics perspective, when, after any election, when you're looking at new appointments to these sorts of roles, those are exactly the qualities you want. And with Janet Yellen, you're getting somebody who's a highly competent, highly experienced economic policymaker, which is just reassuring. Is exactly what's needed in the midst of crisis.
Melanie, what does she need to do? So the first thing, how will she get along with Mitch McConnell? Will we get the stimulus that the U.S. needs?
That's still a big question, right? So part of the blockage, it seemed before, in terms of getting a package through, didn't really seem to be coming from the White House. It seemed to be coming from Senate Republicans. So as has already been pointed out, a key here will be what happens to those Georgia runoffs, how the balance of power in the Senate shifts. But look, you've got someone coming in who's highly respected, who hopefully can work somewhat across party lines and get something done. But it's still important in the US that we do see fiscal support provided. There are a number of key provisions that roll off at the end of this year. And of course, we already saw the provisions of the CARES Act roll off. So there is a concern here. But, we saw a willingness from Senate Republicans before the election to pass something in terms of stimulus. So I'm hopeful we will see a package in the new year.
Melanie, when you look at some of the things that we could see from Yellen, how useful is it to have someone that was a central banker at this juncture in the economy actually take care of fiscal policy? Can that only be an asset?
I think what's important anyway, in times of economic crisis, that monetary policy and fiscal policy can work together. There's some coherence, some cooperation, there's good communication between the two areas. And hopefully with the appointment of Janet Yellen, that will be the case in the US. So I think that aspect of things is important. I think what's also important is that she will have great respect for the independence of the Fed. So there's an ability to work together while respecting that independence, and that's a good combination.
Thank you so much, Melanie Baker there from Royal London Asset Management stays with us. Now, coming up, we'll talk a lot more about the transition to the economy. We'll also talk about vaccines and the Bloomberg COVID Resilience Rankings. The project looks at how the world's biggest economies have handled the pandemic. That discussion in about 30 minutes from now. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, breakthroughs in vaccine development mean an end to the pandemic is closer than ever. Pfizer has sought emergency use authorization after its trial success, while shots from Moderna and AstraZeneca appear to be effective in early results. But despite the positive news, world leaders caution the fight is far from over. So still with us, Melanie Baker from Royal London Asset Management. Melanie, I don't know whether you worry more about still scarring in the economy because maybe we don't return back to normal straight away, despite vaccines, in early 2021, or whether you worry more about something else. You worry about China, you worry about defaults, and the fact that in all this vaccine news, some of the underlying concerns there are getting lost.
Yeah, there are always plenty of worries, right? And absolutely, the China risk was one that was around and prevalent kind of pre-crisis. We think that was a theme back then as well. But I think you're right. There's a lot of road to travel between now and when we actually get the vaccines. There is the potential still for some long-term economic damage to be inflicted. So it's still really important that policymakers continue to provide support in the period between now and when we get the vaccine. I think one of the long-term worries that I have is actually around the kind of debt build-up that we're seeing with companies. So firms that have built up a lot of debt that And when you get a heavy debt overhang, you'd expect that to make many companies reluctant to invest into the recovery. It could be one of those things that just holds us back more than expected.
Melanie, what would a policy mistake actually look like? Is it, too much stimulus or not enough? So if there's too much stimulus and then enough people get vaccinated, are we going to see inflation shoot up?
That's a really good question. So in the near term, my worries are about not enough rather than too much. I think it's not so much too much, it's that stimulus is kept in place for far too long would be, I think, the way I'd look at it. So you're right, once we have vaccines, once the recovery is well in train, how long does it take before central bankers take their foot off the pedal, before we get some just rolling in even of the rhetoric? So that would be a concern, I think. But I still think, in terms of central bankers here, we've got, if we saw a return of inflation, if inflation really started to pick up, I wouldn't expect the major central banks of the world to just sit back and let that happen. So I think we'll get higher inflation in the medium term. I'm not convinced we'll get high inflation.
And Melanie, what happens, even with, medium inflation, do we have central banks thinking about normalizing?
We will do at some point, right? But it's a long way off. The clear messaging from central banks is that they're a very long way away from thinking about hiking rates. I think it may happen sooner than markets currently have priced in, but this isn't a story for next year and possibly not even for the year after that.
All right, Melanie, thanks so much. Melanie Baker, they're senior economist at Royal London Asset Management, and we'll have plenty more, of course, on inflation expectations, five-year, and what we're seeing in the U.S. Now, coming up, as Germany deals with the second wave of coronavirus infections, how are restrictions affecting Europe's biggest economy? We'll be talking to the president of the IFO Institute. He's Clement Fust, and he's up next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get the latest on Europe's biggest economy. Yes, German business confidence. Well, German businesses are losing confidence in the outlook after a resurgence in coronavirus cases forced authorities to reintroduce restrictions. Now, an expectations gauge by the IFO Institute fell to 91.5 in November from 94.7 the previous month. That was a steeper drop than economists had forecast. Well, joining us now to talk about all of this is Clement Fust. He's the IFO president. Mr. Fust, as always, thank you so much for joining us. How are you expecting businesses to react for news of the vaccine? Are they going to really think that everything is going back to normal, or will there be a lingering feeling that we have to be cautious?
I think that most businesses see this was good news. The vaccines are coming around, but they also think that this will take some time. So before that reaches the economy, before the vaccines are distributed to a sufficient number of people, this process may take months. And the business outlook in the IFO index refers to the next 6 months. And here it looks like most companies are saying, well, the vaccine is going to help, but later.
When you look at current expectations about extra restrictions being put in place, what are businesses telling you, Mr. Fust, about what they want? Do they want a longer-term plan to understand exactly what it will look like in spring, or are they okay with the step-by-step process?
They would certainly like a longer-term plan. Some also say we would like to see a longer-term strategy, at least. It seems like the political strategy is one tailored to the next 4 weeks, but it's not a long-term strategy. At the same time, most businesses are aware that there is a lot of uncertainty about the pandemic. So as long as we don't know how this develops, it's inevitable that adjustments will be made. So my impression is that businesses are more or less resigned to the fact that this uncertainty, these measures that are coming in that are lifted again, this uncertainty is going to stay for some time.
How much of a vaccine boost will Germany and Europe get? Could if we get the right vaccines and we're able to vaccinate enough people, does it mean that we see an economy that fully recovers in 2021?
It's not going to be an economy that fully recovers in 2021, but the recovery will certainly become broader than it is today. And what's important is that there is really light at the end of the tunnel. We don't know, will the vaccine be available widely enough and distributed enough in the summer, or will it be more next year's winter? But I suppose the hope is that we will not have a third wave in the winter of 21-22. I think that's the key message. And I would say the recovery will be there in 2022. That is, we will reach pre-pandemic output levels in 2022, but unfortunately not in 2021. The recession is just too deep.
Private consumption, I think we're looking at some of the numbers. We're crunching some of the numbers in the newsroom. And private consumptions was rising some 10.8%, I think, in the 3 months through to September. What are you expecting in the Christmas period?
So private consumption is going to be, will continue to be recovering. Of course, there are some sectors where people cannot spend. In hotels and restaurants, people cannot travel, and this is holding back spending. People spend more on other things. That's clearly visible. So parts of retail, do-it-yourself, retail, these things are working quite well, but other parts of retail and restaurants aren't working. And the result is that consumer spending is going down, or is lower than before the pandemic, but not because people don't have money, it's because they can't spend it.
Thank you so much for joining us today. Clement Fust there, the IFO president, with, of course, great insight into what German businesses will and won't do over the next couple of months. Now, coming up, we'll talk a lot more about Janet Yellen. We understand that she's the pick of Joe Biden to be Treasury Secretary. We'll discuss what it means for stimulus. We'll also discuss the path of the world's biggest economy. The markets seem to like what they're, knowing so far. So this is what they're focused on, not only on the Janet Yellen appointment, and I'm seeing a lot of praise, of course, on Twitter by people that have worked with her. As Eric Wallbank has said, she's no stranger to Bloomberg viewers, but it's very clear that stock markets globally trending higher also after the GSA acknowledged that Biden is now the apparent winner of the presidential election in the U.S. So markets calm. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
Well, that was a former Fed chair, Janet Yellen, speaking about the need for more stimulus last week at the Bloomberg New Economy Forum. She's President-elect Biden's pick for Treasury, that's according to our sources. Now, it's a move which signals he plans to act aggressively to revive the world's biggest economy. With Yellen in charge, Biden's Treasury Department will likely be prepared to meet the Fed's policy of lower for longer interest rates with expansionary government.
Hi, this is Brooke.
To be joined by someone who worked closely with Janet Yellen at the Federal Reserve during the global financial crisis. So joining us now is Randy Krosner, former Fed governor and professor of economics at the University of Chicago Booth School here in London. Randy, as always, thank you so much for coming on, especially coming on to talk about Janet Yellen, who you've known for many, many years, and I think you met over 3 decades ago. What will she be like as Treasury Secretary?
I think she'll be a very effective Treasury Secretary. She's obviously someone who knows Washington policy pretty well, chair of the Council of Economic Advisors, chair of the Fed, and now Secretary of Treasury. So I think she's been very good at trying to build relationships across the aisle in Congress, and I think she has a very good focus on really trying to get things done.
How difficult? I mean, it does seem, Randy, like we're at a juncture, right? It's lower for longer. You have concern about exactly what monetary policy can do. How much coordination could she actually do with the Fed? Like, how does it work? Is this going to be a new tandem force that we'll be, reckoning with?
It's a very natural combination because she and Jay know each other very well. I think she and Jay are very much on the same page when it comes to monetary policy, of keeping monetary policy accommodative through this challenging time. And exactly as the quotation that you had from Janet said, she understands that monetary policy is super powerful in certain realms, but it is by no means all powerful. It provides the foundation for recovery, but unless you have appropriate health policy and fiscal policy, you're not going to be able to have a sustained recovery. And I think she's going to understand that well and be able to articulate that well, both within the administration and to Congress.
Because of the secular stagnation environment and these complex and new ways of working between monetary and fiscal policy, what should be her #1 priority right now, Randy?
Well, I think monetary policy is, from her perspective, in a very good place. So I think what she needs to do is thinking about building the coalition for the kind of programs that she thinks is most appropriate for sustaining recovery. And so for parts of that is making sure that households are provided support during the transition, making sure that there's a really solid environment for investment, and so not punishing companies for making profits, but trying to make sure that they're encouraged to make investments to build productivity, to make sure that that then leads to higher wages, which is the standard way that things have worked. So I think there's a very clear program, and I think that's what she will focus on.
Randy, so what kind of stimulus do we need? What kind is it? Is it size? Will she be able to get that with Republicans, or is it actually whatever is signed where they'll spend it?
So I think it's much more about where to spend it than how much to spend. I mean, we spent 15% of GDP, $3 trillion in the U.S. In March, April, and I think that was important as a sort of a shock absorber. And but now we really have to pivot policy to thinking about the foundation for growth and what is next. So thinking about not just support packages, but also how do you retrain workers from hospitality and transportation sectors to go in more technology sectors? How do you encourage investment in an uncertain environment? And I think those really need to be the priorities that I think both sides can agree on. So it's not about just how much that, like, well, if we do $2 trillion, everything will be fine. $1 trillion is not enough. It's really what do you spend it on, and how do you get that as a foundation for recovery?
Randy, if we're really 4 or 5 months from a vaccine that a large majority of the population can have, what does it mean for inflation? Is there a danger that suddenly the economy picks up and we're not ready for it?
So I think in some sense, the Fed can only hope that they're in that kind of difficult situation, because the Fed has been undershooting its inflation target since it announced it in 2012. It has now adopted the average inflation targeting policy, which says since we've been running below, we'll be happy to run above for a bit. So I think they'd like to get to 2% or even a little bit above, and then they can deal with those issues. I mean, I would really love to see that the economy turns out to be stronger than I expect that it is, and that we're faced with a little bit more inflation problem rather than a stagnation problem. But it is something to be concerned about. But at this point, making sure we get to that good situation, I think, is more important than worrying now about the possibility that inflation might get a little bit high in 6 months.
Randy, do we need to start worrying about debt now, or is that a problem that we don't even talk about it for at least 18 months?
Well, I think it gets back to what we were talking about before. It's what have you spent the money on, and is it going to be something that'll help to improve productivity in the economy and get the economy growing faster? And so it's just like with a company. If a company takes on debt and doesn't spend the money very wisely, it doesn't do so well, and not so good for the people who bought those bonds. But if it's a company that's investing and that money is being used for new investments that are going to produce growth and help the analogy, the economy to grow faster, I think that's really the key. So if we can focus on policies that are going to revive growth and revive jobs and really get us to transition to this new post-COVID economy, then I think we can deal with the debt issues. If it's just spending for spending's sake, then that's a real problem.
Thank you so much for joining us today with, of course, some great insight to working with Janet Yellen for so many years. Randy Kroesner, their former Fed governor. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Donald Trump is backing the start of a transition, despite saying he'll continue to fight the election results. A key U.S. agency is now recognizing Joe Biden as the apparent winner of the election. That triggers the formal transition process, giving Biden and his team access to government officials and $6 million in funding. Now, according to local media, Israeli Prime Minister Benjamin Netanyahu secretly flew to Saudi Arabia to meet with Crown Prince Mohammed bin Salman and U.S. Secretary of State Mike Pompeo. It's a major breakthrough between the two nations that have no official ties. A Saudi official is denying the meeting did take place, and Netanyahu is refusing to comment. And Elon Musk is now the second richest person in the world. He's overtaken Bill Gates with a net worth of $130 billion. $100 billion is from this year alone. He rose through the ranks, has largely been driven by Tesla, whose market value is nearly $500 billion. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Danone has cut up to 2,000 jobs, including a quarter of positions at its global headquarters. That's as the world's biggest yogurt maker attempts to save €1 billion and revive profitability. Well, the chief executive, Emmanuel Faber, spoke to Bloomberg earlier this morning.
The COVID pandemic has exacerbated a number of trends in the food sector. And the biggest of them is certainly the question of local. Sovereign governments are talking about local food sovereignty. The multinational environment is talking about the resilience of food systems as being founded on local, and consumers are going local. So for decades, we had these global category P&Ls, and they've been great doing that. But I think we've been probably hit by some of the trends in the COVID, and some of that has got to do with the structural weaknesses that we didn't address. So we have decided to pivot, indeed, as you just said, to geographies with one powerful unit of Danone entities, one and one only in each country, instead of 3 or 4 going to verticals, which will download the local decisions for capital expenditure, for brand development, for innovation, much closer to the market than we did before. Because we produce locally. Most of what we actually produce is consumed. 90% of our volumes are consumed locally, but we still think more too global. And so that's essentially what we're doing, which will pivot the roles of our central functions and therefore reduce their size, hence the savings that we expect from that plan.
Emmanuel, yesterday you admitted misuse of resources, and analysts are skeptical about this plan. One saying, we've been here with Ford Danone. We're not sure if this will really make a difference. How are you going to convince the market that this plan will actually work and you will be able to stem those structural changes?
Well, I think that's not a statement that's made, based on facts. The only significant global program that we had is a very important one that we did 3 years ago called Protein, that was about saving €1 billion out of our indirect spend. but that doesn't change anywhere the way we work and how much, today we still have 5 instances to decide on most of our CapEx routine decision making. Tomorrow we will have 2. A brand like Activia still have 4 instances for discussion. Tomorrow we will have only 2. And so it's really about the savings on the way we work, which wasn't the case before. This is a big change and the only big change of organization this company has ever made. And the other thing is that we're creating in parallel an end-to-end integrated value chain system that will also extract several hundred millions of euros out of efficiencies cross-category in the countries that we weren't able to attack while we were in the silos of categories.
Emmanuel, these are huge ambitions. The market is perhaps a little bit short of breath and short of time for you to execute. How much time do you give yourself to fully execute this gargantuan task?
Yes, well, it's not gargantuous. I think it's well planned and it will be well executed. I have absolutely no doubt on that. We've set teams apart to execute that plan and to deliver on the business in the same time, in parallel. We expect to start that in the early part of next year with a full completion in the course of 2022, the first benefits of which will be in the second half of next year already, which means that we've said that we would return to profitable growth as soon as the second half of next year.
Well, that was the Danone Chief Executive, Emmanuel Faber. Now, coming up with the end of 2020 in sight, so which economies have handled the coronavirus pandemic well and which have handled it badly? It's not only, of course, backward-looking, but we'll look ahead to the next 6 months and who will do a great job with the Global COVID Resilience Ranking. We'll also talk about the vaccine. The results next. This is Bloomberg.
Yes, we have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
It's not a silver bullet. What we need surveillance to be stronger.
The next 6 months in the Northern Hemisphere will be very tough.
It might be a little bit accelerated, but I don't think that is going to be a game changer.
In practice, it is dealt with by each country largely autonomously. But its long-term solution has to be on some global basis.
I would very much hesitate to declare victory now because the fight is far from over.
Global business and political leaders are on vaccines and the path ahead. Now, let's talk about COVID-19. With little more than a month left of 2020, which economies have done best in tackling the worst public health crisis in a generation? Bloomberg has crunched the numbers to determine where the pandemic has been handled most effectively and with the least amount of disruption to business and society. Well, joining us now to discuss all of this is Bloomberg's Global COVID Resilience Rankings, Rachel Chang. Rachel, thank you so much for putting this all together and then coming on TV to talk about it. So first, how have you actually constructed this new ranking? So I think Rachel is having a couple of technical difficulties, but I do have the main takeaways from the top performers right here. I don't know if Rachel is with us, otherwise we'll try and call her back to give a better, more of an understanding of exactly what's behind this research. The top performers, of course, no surprise, number 1, New Zealand, number 2, Japan, and number 3, Taiwan. Rachel, can you hear me? I think we've lost Rachel, so we'll get that connection back up. But in the meantime, let's look at the markets, and then we'll get back to all of this great work done by our Bloomberg team to try and figure out also if access to vaccines and the right vaccines means that some of these countries will be on a better footing even into 2021. Now, stocks are definitely rallying. The dollar seeing a bit of weakness. First of all, it's the start, of course, of the U.S. President-elect Joe Biden's formal transition. If you look at dollar, it's extending its decline to the lowest since 2018. Stock markets globally trending higher after the General Services Administration acknowledged that Biden is the apparent winner of the presidential election, and the move reduces political uncertainty in the U.S. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
All right, we were talking to you about the Bloomberg Global COVID Resilience Ranking, so let's get straight to our Rachel Chang, who put this together. So, Rachel, first of all, I was asking you, how has this been constructed, this new ranking?
Hi, yes, that's right. We've spent months on this new ranking, and what we really wanted to look at was indicators that could give a holistic view of what the situation is like in different countries right now, 1 year, almost a year into COVID-19. So not only do we have the usual cases, fatalities, mortality rate, we've also looked at access to phase 3 vaccines, we've looked at lockdown strictness, we looked at the effectiveness of healthcare systems, and the overall idea is to show where are the places that's the best and worst to be right now in the COVID era.
So do top performers in the past, and I know you have, Taiwan at number 3, you have New Zealand at number 1. Does it automatically make the top performers also for next year because of, early deals with vaccine makers?
Right. So what we've seen is that access to vaccines indicator is going to become increasingly important. And this is, I think, the most obvious in the example of the U.S., where I think the administration of Donald Trump basically said, wasn't going to really put effort into controlling the virus. It was completely focused on finding vaccines. And that has initially looks like it might pay off with the mRNA vaccines moving very quickly towards approval. So we can see that the U.S. is positioned very well. It has the most vaccine orders in the world. And as those approvals start to come through in the next few weeks, that's going to feed through quite quickly into what we see in terms of cases and fatalities, and could really bring about quite a big change in the ranking.
Rachel, how did Western European countries fare?
So, unfortunately, Western European countries, by and large, are in the bottom half of the ranking. We know very well that major countries, France, Italy, the UK, they have struggled a lot. They've struggled, especially in the last few months, with a second wave that has erased the gains from the earlier lockdowns, and in fact has been worse than before. We've seen that they've had to reimpose lockdowns that they said they didn't want to. But the fact is that it's not true that it may be a cultural or regional thing, because we do see that the Nordic, the Scandinavian European countries are ranked very highly. We have 3 Nordic countries in the top 10, and a very effective method that they used was border control. Although these countries are in the same passport-free Schengen area, they did not let outsiders into their countries for pretty much the whole year, whereas what we did see in the Western European countries is that summer vacations, crisscrossing the continent, reignited the situation that we see now.
Thanks so much, Rachel Chang there joining us this morning. Now, Germany's DAX benchmark is about to undergo its biggest overhaul since its inception in 1988. This morning, operator Contingo announced new rules for inclusion in the DAX. It will now be bigger and membership rules more strict. Well, joining us to discuss all of this is our Danny Berger. So, Danny, good morning. What changes are we now going to see from the DAX?
Francine, well, in terms of getting bigger, the DAX is now going to have 10 more members. It'll be the DAX 40 instead of the DAX 30. The MDAX, the mid-cap index, is going to shrink, so that will be 50 members versus 60. So these changes are going to happen next year, September 2021. New requirements as well for those included in the DAX. Companies that are going to be included from now on must have 2 years of profitability. So that means current entrants like Delivery Hero more or less are still in the index, even though they don't have yearly profits, but they're getting grandfathered in. Other things, they need audited statements, both quarterly and annual. But the important thing here is if they don't meet those requirements, they have a speedy exit. They need to post them within 30 days or else they get kicked out of the DAX. I should also mention that one of the proposals that was rejected by this 4-week review was to exclude companies with exposure to controversial weapons. The operator here saying that in its comments it got, in the feedback it got, there's really a question to whether such sort of ESG requirements have any place in the benchmark index. It said that it really committed to these various ESG parameters on things like the DAX ESG 50 index, but otherwise the current benchmark not going to include that controversial weapons ban, Francine.
Danny, very quickly, how much of this looks like to be a reaction to Wirecard?
Certainly most of it does. Part of what they're doing, trying to allow companies to speedily exit the DAX should they not meet these requirements, is sort of a nod to what happened with Wirecard. For 2 months, it was insolvent and stayed in the DAX. So this gives the DAX a reason to pull those companies out, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest, of course, on the DAX. Now, we'll have plenty more on the market. So Bloomberg surveillance continues. Tom Keene joins me out of New York. I know we'll look at the transition. Finally, it's starting to happen for Joe Biden. And we'll also look at his administration, some of the cabinet picks. We'll speak extensively about Janet Yellen. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. 3 weeks after the presidential election, Joe Biden is formally designated the winner. The transition process can begin. Stocks and futures climb. The dollar slides. From the Fed to the Treasury, Biden looks set to nominate Janet Yellen, a supporter of more fiscal spending, as his Treasury Secretary. She was the first female Fed chair. If confirmed, she'd be the first woman to head the Treasury. Plus, the DAX gets the biggest makeover since its inception, increasing the index to 40 members with tougher rules on reporting and profitability. Good morning, everyone. This is Bloomberg Surveillance. Happy Tuesday. I'm Francine Lack in London, Tom Keene in New York. Tom, the markets are, pretty quiet at the moment. They're actually, I guess, sighing with relief that they got through, for the moment, not only a Treasury Secretary pick, which we're still waiting confirmation of, but multiple sources have said it's Janet Yellen. But they're also sighing because there was, for the first time in 3 weeks, acknowledgement of the transition. With the GSA, we're all now experts in U.S. administration administration, with the transition process starting to kick in.
Well, yeah, not only the good news, but really, I think, Francine, just as much that there was no bad news today, and that gives a lift to equities, some other adjustments in the markets. Jeffrey Curry will join us from Goldman Sachs, which is wonderful. But futures up 27. We'll talk about the data in a moment. But yes, Chair Yellen, front and center here on this historic moment for our politics.
Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. President Trump is finally calling on his agencies to cooperate in the formal transition process with Joe Biden. That follows weeks of inaction. The General Services Administration made it official with its acknowledgement that Biden was the apparent winner of the election. Still, President Trump says he'll contest the outcome of the vote. Joe Biden has turned to former Fed Chair Janet Yellen to be his Treasury Secretary. If she's confirmed, Yellen would become the first woman in the job. She's pushed for additional fiscal spending to help the economy get through the pandemic. Yellen's likely to win support from both Wall Street and Democratic Party progressives. Meanwhile, a Michigan board has voted to certify the election's results. That practically ensures Joe Biden's victory over President Trump in the state. Only a possible Republican recount stands in the way of assuring that Biden will win Michigan's 16 electoral votes. The Trump campaign says it will keep challenging the results. And British Prime Minister Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional restrictions designed to last until spring. Rules may be relaxed in time for Christmas. Johnson says that if all goes well, the vast majority of people who need a coronavirus vaccine will get one by April. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. In the equity market's a nice move here. I want to make clear on intraday futures, we did get the Dow 30,000 for one cup of, not even a cup of coffee, a little quick espresso shot. But for the most part, we're buttressed up right against tradable highs on SPX and on Dow. 3602 on SPX futures up 27 points, Dow up 29,821, 29,821. And the VIX really cooperates off of yesterday's enthusiasms, 22.20. We'll see you to a 21 handle there in a bit. Bonds don't play. The FX market, we've got continued persistency of weak dollar is how I'd put it. Yen backs up 104.24. That's about all I've got right now. Francine?
Yeah, Tom, I have a very similar data check to yours. Energy stocks leading the Stoxx 600 index higher in Europe. Travel companies, banks also notching gains in this broad advance. Again, stock markets globally are trending higher after the GSA acknowledged Biden as the apparent winner of the presidential election, and the move just reduces his political uncertainty in the U.S., and it's just, pushing that good mood feeling out there in the markets. Dollar edging lower with treasuries. Crude oil, I've said it, it's advancing, Tom.
Very good. Usually we just bring in these, what we call SOTs or videos, but they need a little explanation as we get to Michael McKee and his wonderful perspective. On October 19th, it was just another interview with Chair Yellen. It was on a project of hers. That was great. I, of course, was completely rude and brought up Treasury. And even worse, I just sort of went along through the motions. Yellen picked up the baton and directly addressed the fiscal policy of this nation. She brought that up in the interview versus us really bringing it forward. Here is a fired up Janet Yellen.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis. But the fiscal support has now lapsed. It is not their objective ever to directly try to help the federal government finance its budget deficit, and that would be a very dangerous kind of support to provide. But I do expect, I think asset purchases have worked. They're holding down longer term rates, and I expect there to be ongoing purchases, but probably not geared to the federal deficit.
Very good. Chair Yellen there, we believe we'll be heading towards Treasury. Michael McKee with us now with just tons of experience on this now. You know, Michael, I go back and I look at Albert Gallatin, and maybe I look at, you know, a few other bright people that have taken the job. But other than that, she's the smartest woman in the room as well. In crisis, what will she do as Secretary of Treasury?
Well, it's going to be interesting to see how well she gets along with Congress. If there's one area in which she hasn't done the same sort of thing as Jay Powell, it's in liaising with members of Congress from both parties. We don't yet know who's going to run the Senate. And so that will be very important in terms of what they will be able to get done going forward. She should be easily confirmed. She's been confirmed 3 times. But in terms of a stimulus package, that's an open question yet. However, the important thing, I think, to most people is that she's very familiar on Wall Street. And as Biden said last Thursday, his choice is someone who I think will be accepted by all elements of the Democratic Party, from the progressives to the moderate coalitions. And she's got a history of serving under Democratic administrations, and with her background in labor economics, known for her advocacy of lower for longer interest rates to drive down the unemployment rate as far as possible. And so I think she'll be quite popular in the beginning.
We know Jack Lew, folks, of recent vintage, who, of course, came out of the trenches of Massachusetts politics in terms of that congressional mandate. Michael McKee, is there a theory of Yellen? Is she a kind of economist?
She's a labor market economist who would lean, she's definitely a Keynesian, but she leans towards the idea of doing as much as you can to bring down the unemployment rate as opposed to controlling inflation. Not that she likes inflation, but she felt that something had changed in the economy. And there's a famous line from her in 2012 when she argued for QE3 and against those worried about additional bond buying leading to accelerating inflation or a market bubble. She said, "These concerns pale in comparison to what I view as the potential economic and human costs of failing to reduce the unemployment rate as aggressively as we can." She set the stage for what the Fed has been doing. Actually, under her, the unemployment rate got down to 4.1%, much lower than people thought it would, much lower than what the Fed thought the NAIRU was, and it continued under Jay Powell. But she was the one who really pushed the policy of let the economy go and see how low we can get unemployment.
Michael, given the secular stagnation environment, you know, how will monetary and fiscal policy have to work together, and how new and complex will that be?
Well, it will be interesting to see if they adopt anything new. What a lot of people are saying now is that because of her experience at the Fed, she understands the importance of the Fed lending programs that Treasury Secretary Steven Mnuchin is eliminating, and that she would move quickly to try to put things like that back in place. Now, of course, what the Treasury did was guarantee the Fed against losses, and if the Fed gives back the money that's not been spent to do that yet, in theory, she could reprogram it and bring it back. So people will look to see if they set up the same kind of system where the Treasury helps the Fed with lending programs going forward. What they do after that is kind of an open question. The Fed at this point can only raise and lower interest rates other than these lending programs, so there isn't much more for them to do. And so, if the Fed is pushed to keep rates lower, which would be basically the only thing they can do, lower for longer, they probably will go along because that's the economic situation they find themselves in.
Right, but Mike, could we see more coordination between the two, or is it just too soon to tell?
Well, I'm not sure how much more coordination there can be in the sense that they have worked very closely together so far. You go back to the Treasury-Fed Accord during World War II, the Treasury basically agreed to keep interest rates pinned at a low level in order to fund the war effort. And I suppose you could formalize something like that, although Fed officials are concerned about the idea that you wander too far into fiscal territory. They'd like to stay in their lane as much as possible, but that doesn't mean they won't do what Treasury wants in keeping rates low because the economy calls for it.
Michael McKee, thank you so much. I'm sure we'll hear from you through the day on Bloomberg Radio and Bloomberg Television. Our international economics and Janet Yellen correspondent. Coming up, Jeffrey Curry, Goldman Sachs. Let me give you the framework for that. Brent crude within target of 47, 46.53, West Texas 43.58, and gold negative $18, 18.26 on gold. A good time to speak to Dr. Curry. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy. Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. Lots going on. We're going to get to Turkish lira in a bit. It is centered tendency off the weakness and then the huge advance, and it's really come back abruptly this morning. 7.95 right now in Turkish lira. We'll do that in a bit. Right now, Jeffrey Curry with us with Goldman Sachs, our head of commodities research. Jeff, let's start with first principles. Oil up. Why?
Well, for one, when we look at the demand picture with the lockdowns in Europe, the impact on oil demand and economic activity is not nearly as severe as what we saw back in the spring. So that's one positive factor. But the other positive factor is people are looking out into the second half of next year, and they see a much tighter market. And whether we're talking oil or any of the commodities, every single one of these commodity markets, with the exception of wheat today, is in a deficit. So you have to ask yourself what happens when you get a normalization in economic growth if these markets are already in a deficit. And that's what really creates the upside and why every single one of these markets have been moving higher over the last several weeks.
Jeff Curry, let's vamp off the great Daniel Yergin and call it the prize. President Biden has to deal with the prize as well. Does the election fold into oil dynamics, or rather, I should say, in which way does it?
Well, you've got two aspects of that. Two of them are, in terms of looking at the impact that regulation is going to have on the oil market, it's very positive. The other one is a lot of people think that the environmental policy is negative to oil. Yeah, it may be 10 years down the road, but initially it creates a lot of stimulus with it'll benefit oil demand as opposed to hurt it. And then the Chinese are buying all sorts of commodities because they think that Biden is going to be much softer on the trade war. The negative is there's a higher probability of Iran coming back online. But I want to emphasize that's embedded in our forecast, and our target for the end of next year is $65 a barrel.
But Jeff, good morning. So what's your base case in terms of how energy policy under a Biden administration actually changes?
Well, obviously, the biggest moving factor is an Iranian deal. That is the one that I think most people in the energy markets have their eye on. The other is that you end up with, modestly tighter regulations around emissions with methane and other regulations on the sector. I think the big one that everybody's focused on in energy policy is Iran. But I want to emphasize we have it embedded in our forecast, and we still have deficit market second half of this next year and going into 2022.
So, Jeff, do you also have embedded in your forecast a vaccine that could be rolled out to enough of the population worldwide by the first quarter of 2021, where we actually go back to normal?
Yeah, I want to emphasize that vaccine is really a tactical catalyst, for upside into 2021. Again, I want to just say it again. Every single one of these markets, whether it's the agriculture, metals, or energy, is in a deficit, with the exception of wheat today. Which means what happens when you get that tactical improvement in normalization into the economy, you get the upside. But I think more importantly is that the pandemic itself is a structural catalyst, which we think that V-shaped recovery next year is going to be the beginning of a structural bull market in commodities.
Well, I mean, this is really important, Jeff. I don't have a chart in front of me, but it's just a blended Bloomberg Commodity Index. It's really buttressed right up against resistance. Is the Goldman Sachs call that we finally get a legit turn towards some form of optimism in commodity and a lift in blended prices?
Yeah, absolutely. I think there are three themes that we're focused on. The first is we have policy-driven demand, something we haven't seen in a long time. If you think about, the financial crisis, you needed policy aimed at financial stability. The COVID crisis is one of social need, and so policies aimed at social need, which impacts lower income households, where you see, more cyclical activity and, much more commodity-intensive growth. So you think about following the financial crisis, policy was aimed at creating a wealth effect. The wealth effect benefits high-income households. They don't consume a lot of commodities. There's not a lot of them in numbers. And when you look at policy directed at social need, it's much more commodity-intensive, and it impacts a lot larger numbers. So that's policy-driven demand one. The other big theme is we call it the revenge of the old economy. It means strong returns in new economy, sucking all the capital out of the old economy, structural impediments to supply. That's why these markets are in a deficit. The third theme is reflation. A weak dollar, as we know, just reinforces higher commodity prices. So, our conviction on commodities moving higher, I want to emphasize soybeans, corn, copper, a lot of these markets are already moving a lot higher today.
Jeff, what are you expecting from OPEC next week? What will they do?
Now, our base case is a rollover of, the current production cuts. We don't see, the increase in supply coming until April. I do want to say that, there's a little bit of uncertainty around it right now with comments out of the UAE. But I want to emphasize they've gone back and said they're committed to OPEC. It's not in their interest to start a price war at this point right now. So we think it's going to be a rollover, and they'll extend that production increase until April of next year. I want to emphasize, due to the structural declines in supply, the increases in demand next year, that we still have Saudi going to 9.5 in April of next year, going to 10.5 in first quarter of 2022. So there's room for OPEC to bring that supply back online, which, everybody in OPEC is going to get to share in increased market share going into the second half of next year, with the vaccine on one side and structural declines in supply on the other.
Jeff, thank you so much. Jeff Curry there at Goldman Sachs stays with us. Now, coming up in the next hour, we'll be talking a lot more about Janet Yellen with Jason Furman. He's Harvard professor and former chairman of the Council of Economic Advisors during the Obama administration. That's coming up in about 30 minutes from now, 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. BlackRock is betting on the future of personalized index investing. The world's biggest asset manager agreed to buy Aperio, a creator of tailored index strategies that are popular with the rich. The price, a little over $1 billion in cash. Aperio is owned by private equity firm Golden Gate Capital and Aperio employees. Goldman Sachs is planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares, even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January. And it's a major shift in a fight that has fractured the American auto industry. General Motors will withdraw from the legal battle between the Trump administration and California. GM had backed the administration's attack on the state's ability to set tougher emissions rules. GM now says its goal of speeding adoption of electric vehicles is aligned with Joe Biden's support of cleaner cars. And that's your latest Bloomberg Business Flash. Tom, Francine.
Where to go? Thank you so much. Now, the Tesla chief executive, Elon Musk, giving a keynote on tackling the next generation of batteries. Now, this is at the European Conference on Batteries, Tom, something that maybe was a non-event even 3-4 years ago. Now, really, the future of some of these companies depend on what kind of batteries they'll get. So you can see, as most of us, this is a virtual event with Elon Musk giving his thoughts on batteries, and we'll have plenty more on that when he breaks news or gives us an insight into how our battery storage will be different. We'll bring you that. In the meantime, this is what the markets is looking at. So the market's figuring out exactly what the U.S. administration will bring. Let's actually listen in to Elon Musk right now.
And as I said, a lot of processes where we have to quite radically improve the cycle time, and where we have to redesign machinery for continuous flow operation. I've said this publicly on many occasions that designing the prototype of any advanced technology is, I think, relatively easy, and then scaling up to high volume production is very hard.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Focus. Mr. Musk up 59% per year annualized on Tesla. It is an S&P 500 stock. Many people a number of quarters ago suggesting the death of Tesla. Certainly into 2021, that has not happened whatsoever. A battery conference in Europe speaking on climate, on ESG, which Francine very quickly brings us to the moment at hand in the United States.
Right, Tom, and this was yesterday with Joe Biden picking John Kerry, of course, the author of the Paris Accord, as his special envoy for climate. Does that mean that we'll see peak oil sooner than expected? I'm not sure, so I'll ask Jeff Curry of Goldman Sachs. He's still with us. Jeff, thank you so much for sticking around. We have, someone who's, of course, very well respected, someone who knows the ins and outs in Washington and world leaders in John Kerry. What will he do for renewables? What will he do for climate change? And does it change your view on when we'll see peak oil?
It doesn't change our view on when we'll see peak oil, but it does change our view on the amount of stimulus and potential investment that we can see near term. In fact, I like to point out that we're likely to see so much stimulus around environmental policy, whether it's renewables, battery technologies, alternative energy sources, over the course of the next 5 to 10 years, that it's likely to lead to more oil demand, at least near term, before you start to see it taper off with energy transition off into the future. Now, I like to point out that our base case, bottoms up, is that we need to spend $2 trillion per year to deal with climate change on a global basis. Between the U.S. and what's going on in Europe and China, we think this year the number will be closer to around $500 billion. But this is significant. This is on par with the capital intensity that we saw during the BRICS boom in the 2000s. In fact, we would argue, when you look at copper demand and metals demand over the course of the next 3 to 5 years, it's actually going to be bigger under the current environment than it was under China back in the 2000s. So this is significant in that $500 billion. And if you get a blue sweep out of Georgia, that number goes up tremendously, aided by the Biden administration. So I think near term, the focus is, this is real. It's big. It's going to benefit commodities, particularly metals. And I think it's going in the right direction in terms of dealing with climate change. Dealing with the whole question of peak oil demand, there's a lot of politics that need to be dealt with to get to that point further out. So, that's 2030, 2035 or beyond. I think the near-term focus is really, this is a big stimulus to global economy, and it deals with a big social problem. It goes back to that point I was saying before. Policies focused on social need, climate change is one of those social needs.
Yeah. Jeff, are the Chinese ready for, at the end of peak oil? Are they ready to transition?
You look at the 5-year plan that they put out recently, and it's really focused on green investment, like it is in Europe and like it is in the U.S. So they're making the investments. The low-hanging fruit is on the power generation side, where you do, renewables and to be able to replace coal. The real difficult one is on transportation. The technologies around EVs, they're difficult. They're going to strain metal markets. I like to point out, between Tesla and Apple, they represent 50% of the world's lithium market. So just imagine if we try to really expand it, it starts to really stress some of these commodity markets. Here's a stat I like to throw out. Last year, the world produced 95 million internal combustion engines. We only produced somewhere around 1.5 million EVs. Most of those were PHEVs, the plug-in hybrids. The BEVs were relatively small. So we got a long ways to go. There's a lot of stress that can be put on the metals markets.
Jeff, I'm fascinated with your thoughts here. ESG is oh so in, and we see that with the presidential envoy for climate in the former Secretary of State, John Kerry. Jeff Curry, it's all about price incentives. Let's go back to your Chicago microeconomics. Is the price theory there to effort climate change? Is the price theory there to execute ESG?
Absolutely not, with the exception of some of the low-hanging fruit in the renewables. Goes back to that point. The renewables, the power generation side, coal is one of the most expensive things on your board. We can replace that with renewables and gas and make massive strides on the environment. The problem, it goes back to that point, is the EVs. And they're able to make them cost effective by giving subsidies and other types of tax breaks, which creates problems further down the road. And so that's why we think it needs to be a mix of new technologies and some of the existing technologies going forward. I hate to get to your point about, getting the right price signal. What we need is a carbon market. We don't have a carbon market right now on a global basis. There's one in Europe. But
Jeff, this is really important, folks. As usual, Dr. Curry absolutely nails this. Jeff, do you see any ability to structure an auction-based or law-based carbon market? I don't see it out there. Where is it?
What we need is the two largest emitters in the world, the United States and China, to get together, create common standards around how they're going to deal with this problem, much like they did with acid rain back in the late 70s and early 80s. In fact, I like to emphasize the acid rain experience, they've taken the sulfur out of the system, is a casebook study of successful environmental policy that dealt with a global international problem, and there is no more acid rain. So we know how to do it. We're just not doing it.
Jeff Curry, as usual, just killing it. Jeffrey Curry with Goldman Sachs, our global head of commodities research, a very important discussion there on some of the theories of the incentives underlying climate change. In New York City with our First Word News, here's Ritika Gupta.
Thanks, Tom. The formal transition of power between Donald Trump and Joe Biden has finally begun. The General Services Administration has acknowledged that Biden was the apparent winner of the presidential election, and President Trump has called on his agencies to cooperate. Still, the president says he'll continue to challenge the outcome of the election. Joe Biden may have found a Treasury Secretary nominee who can appeal to both bankers and liberals. Wall Street is likely to support former Fed Chair Janet Yellen because they feared a more provocative pick like Senator Elizabeth Warren. And progressives were concerned that Biden would pick someone too friendly to the big banks. If confirmed, Yellen would be the first female Treasury Secretary. Senator Dianne Feinstein will step down as the top Democrat on the Senate Judiciary Committee. Feinstein is 87. She's been criticized from both the right and the left over how she dealt with President Trump's judicial nominees. Illinois Senator Dick Durbin says he will seek to replace Feinstein as the ranking Democrat on the committee. And Bloomberg has crunched the numbers to determine the best and worst places to be in the coronavirus era. We looked at where the virus has been handled most effectively with the least amount of disruption. Our COVID-19 resilience ranking has New Zealand as the best place, followed by Japan, Taiwan, South Korea, and Finland. The bottom 5 include the Czech Republic, Belgium, Peru, Argentina, and Mexico. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Now, coming up next, we'll talk a lot more about ESG and the markets. We'll be talking to Lori Heinel, State Street Global Advisors Deputy Global Chief Investment Officer. This is Bloomberg.
valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
She's obviously someone who knows Washington policy pretty well. Chair of the Council of Economic Advisors, chair of the Fed, and now Secretary of Treasury.
I'm hoping Janet Yellen takes a page from good Treasury secretaries like Jim Baker or Robert Rubin. Even Alexander Hamilton, get a musical play named after her.
She would be inheriting this Treasury position at a really difficult time for anybody in that position. So we're far from over. These are sobering times for banks, for the markets generally, for individuals and corporations.
She's going to be much more subject to the political winds in Washington. And for all her esteemed accomplishments, I don't know that we know how well she can navigate those political waters, choppy as they may be.
The financial markets, banking, regulatory, these have never been her forte. Remember, she's a University of California, Berkeley trained labor economist. And I think that is where the greatest appeal is.
Strategists and economists are weighing in on Joe Biden's pick for Treasury Secretary Janet Yellen. Now, joining us to talk about the markets is Lori Heinl, State Street Global Advisors Deputy Global Chief Investment Officer. Lori, great to have you on the program. Is all the good news now priced into the markets?
Well, certainly a lot of good news is priced in the market. The fact that we've got promising developments on the vaccine front, the fact that it looks as though we're going to get out of this kind of gridlock in Washington in terms of a transition plan. You now have at least progress on that front. So overall, I think that there are a lot of things that are looking much more bright than they were just a few weeks ago.
What makes you uneasy? Is it, is there a sudden shoot up of inflation, and could we look at a monetary policy mistake, or what are markets not focusing on right now that they should be?
Well, certainly there are still a lot of push and pull factors. So the fact that we've got promising news on the vaccine front is really great, but we still have a period before we will get mass distribution of that vaccine, whichever one actually becomes available. And so we do still believe that there's a need for some sort of a shorter term fiscal stimulus in the US in particular to kind of get us over the remaining part of that hump. Then we probably set ourselves up for a pretty strong rebound in the first half of 2021. Certainly, there's still a lot of pent-up demand. If we do start to see opening of markets globally around the world, that will all be quite constructive. We're much more worried about what happens after that. So the back end of 2021 could be a little bit more precarious.
Lori, good morning. Tom Keene in New York. I want to talk to you, Lori, about the religion at Tepper at Carnegie Mellon, which is it's all about measuring the certitude, the uncertainty out there. And, of course, in the back end of the equation, that's the Greek letter epsilon. When you have a Biden presidency, does the politics and the certitude of Joe Biden, does that diminish the epsilon? Does that diminish the uncertainty? So up we go.
Well, I think it's a little naive to say that all the uncertainty is all of a sudden just dissipated, because think about the sort of longer term structural trends. I mean, if you look at the potential growth rate of the U.S., the potential growth rate of the globe, it was always a little bit less going forward than it was, over the last several decades. So I think what people are most focused on right now is let's get out of this pandemic, which created a massive contraction around the globe of a magnitude that we had really never seen before, certainly not in a modern era. So let's get beyond that. We now do have, if not certainty in Washington, perhaps the basis of some sort of a collaboration. There is, space for the two sides to come together, whether it's related to shorter-term fiscal stimulus or related to other things that might be related to infrastructure spending that can help boost long-term prospects for the U.S. But we're hardly in a place where all of a sudden we can just go to the moon. That's just not where we are today.
Lori, what's so important here, I would suggest, is we underestimate how corporations adapt to pandemic. At State Street, where you've got such a broad mandate, do you just assume that we're underestimating the ability of the corporate world to adapt to the shock and to come out of it and continue to adapt into 2022 and 2023?
Well, it's not just the corporate world, right? It's the corporate world, it's the government world, it's the policy world, it's the consumer world, right? There's been, I think what has been remarkable, when we look back a decade from now and focus on what happened during 2020, I think we'll be all amazed at the rapidity of the response, right? Whether it was the monetary policy that got us away from that kind of liquidity crisis, which could have been incredibly damaging back in the spring, whether it was, the fast shutdowns, but then the reopening, which certainly did lead to a rebound in the third quarter. And then ultimately consumers' adaptive nature, that our ability to think differently about how we conduct our lives and our businesses. So I think there's going to be a lot to learn from the adaptive nature of humans.
But going forward, Laura, what exactly is needed in Janet Yellen? So what kind of policy mix to deal with the secular stagnation do we need?
Well, again, I think the short-term focus is going to be get us over this remaining hump. So if you buy into the narrative that the vaccine finally puts us back at least where we were a little over a year ago or about a year ago, then really the issue is how do you do the least damage possible in the short term? So perhaps a stimulus, and this we think sets us up for more likely to get some sort of a stimulus in the near term. There is then the longer term, which is we ultimately need economic recovery. We ultimately need governments not to have to provide that stimulus. We ultimately need businesses to get back into play. And again, the vaccination and other pandemic alleviation helps us to get to that place. Then we start to worry about things like what's the debt overhang and how is that going to influence things like interest rates and inflation. But that's not a narrative that we're particularly worried about, at least for the first part of 2021.
Lori Heinel, thank you so much. And we will continue with Ms. Heinel with State Street Global Advisors. Coming up within this equity market, we'll talk to Lori Heinel about bonds here in a moment. But Jonathan Golub joins us at Credit Suisse with really quite the year forward note. Looking forward to that. John Golub in the 7 o'clock hour. Futures up 27. Dow futures up exactly 300 points. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Futures up 27. Dow futures continue to advance up 308, 29,854. And the Dow, the VIX, I don't have much action yet, but 22.07, showing 2 days in a row some actually good response. We're thrilled to bring in Lori Heinel with State Street Global Advisors, Deputy Global CIO. Of course, we're working with Rick Lakai as he considers ESG as well. Lori, we haven't talked about bonds, which comes down to trying to figure out the risk-free rate at the zero bound. How do you do that so that you get to an intelligent asset allocation?
Well, certainly right now, bonds still play their role in a portfolio. We've seen that when we have had sharp sell-offs, we do see bond rallies. So while they may not dampen the volatility from equities the way that they once did when the handles were a little higher, they still do offer some protection. So we think it's important to have bonds. We're roughly neutral from a 60-40 sort of strategic allocation basis. We're pretty much neutral on bonds versus stocks right now.
Lori, when you look at some of the concerns with China, and there were a couple of defaults that actually got people thinking about what it meant for the future, are we too optimistic about the trajectory of China from here on?
Well, China's one of the few economies that will grow this year. So while maybe the longer term remains quite a challenge for them, there certainly are opportunities there. And if you look at, just going back to bonds, the combination of, pretty attractive opportunities there, coupled with potential for some currency appreciation. We've actually liked select EM more broadly and also China bonds in particular. So again, it's a bit of more of a relative value trade. So these are sort of exposures that we've been trading around a bit over the last several months. But at the moment, there are some, we think, interesting opportunities there in China, both from a growth perspective as well as in fixed income.
Lori, do havens change in 2021? If you look at the way havens have done so far, how different will they look like?
Well, look, there are a variety of ways to think about that. I mean, certainly from a kind of U.S. dollar flight to quality standpoint, we do think that the dollar is in a bit of a secular decline. So while we may see periodic rallies there, we at the margin don't think that will be as strong a haven as in the past. We think gold, though, still has some merit. I mean, again, in a world of low interest rates, there's not a lot of opportunity cost to holding gold. Gold is a great diversifier, both at the extreme ends of inflation and deflation. So those are areas that we think are important. And we think that the yen continues to be a place where there could be some stability, and you'll see a bit of a flight to quality there. But as you note, none of these things has exactly the same profile that it once had.
Well, this is really, really important, Lori. And I mean, it's away from what State Street does, perhaps, but there's this search right now for hedging proxies to replace bonds. I don't buy it for a minute. I don't think it's in Fibonacci. Can you find a proxy for bonds to do constructive hedging with bond yields so low?
Well, there are a number of things that help, right? So for a long time, the other meme was let's look for income replacement through equities. And so I think part of the question is, what's the proxy that you're looking for? Because if you're looking for income replacement, you still can find that in places like REITs or utility stocks or other places. But if you're looking for, true uncorrelated returns versus equities, a part of it is what's the backdrop that's driving equities, right? Because if you do get a sell-off because, economic activity is contracting, then we do think that bonds step in and provide that kind of buffer. But if you get a sell-off because, valuations are extended, you're getting a rotation, you're seeing the market sort of shift in terms of leadership, then bonds may not have the same buffering property. So a lot of it is where are you trying to get out of that hedging property?
Laura, you have a great vision on what we actually do with our money. Are we way undervested internationally?
Well, yes, certainly it would seem that would be the case. And yet I will say that we still favor U.S. stocks in the equity land. What has been happening is over the last several months, we've gradually reduced our underweight positions to other non-U.S. equities, in part because we do think that the currency appreciation will be there, at least from a dollar-based perspective. But we still think that the U.S. has some sort of wind at its back, including not least the sector makeup. I mean, there are a lot of sort of growth-oriented industries that are more highly represented in U.S. stocks.
Lori, very quickly, we have a question which is basically, you know, does Yellen, Treasury Secretary, finally bring inflation because of fiscal stimulus, and what does it mean for your outlook for bonds? Are you underweight?
So we don't think that the inflation problem is a next year problem. Inflation is a process. It has to build both through a combination of demand, price action, ultimately expectations for inflation. And right now, we don't see that as being anything that sort of threatens the markets for the 2021 period. Past that, though, the combination of all this massive stimulus, very high debt loads, et cetera, those could be inflationary things, but we don't think that that's the problem in 2021.
Lori, thank you so much. Greatly appreciated. Lori Heinel, State Street Global Advisors. Much more coming up. Chris Morangi in the next hour on where to place equity money. We do this. Dow futures up 317 points. This is Bloomberg. Good morning.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This morning, Biden picks Yellen to confront our growing debt and deficit. There is slack in the job economy, so Biden picks Yellen to confront the inequalities of two Americas. Does she become Secretary of the Treasury with an America in recession? Stocks, they lift, the dollar fragile, gold ever weaker. And over the river and through the airport terminal this week, we travel amid pandemic. Good morning, everyone. Bloomberg Surveillance from New York, from London. Francine Lacroix and Tom Keene. What's a travel story in the United Kingdom, Francine? Is Heathrow, like, empty?
Heathrow is empty, but actually, if you look at travel stocks today, Tom, they're kind of on a tear. Now, we did hear from the UK government about relaxing the rules come December 2nd. So at the moment, the UK is in lockdown. December 2nd, we're going to have, we're going to go back to the tiering system. But crucially, Tom, from December 15th, travel rules from and to the UK will change because you can travel, come back, and instead of quarantining or isolate yourself for 14 days, you can take a test after 5 days privately, and you can go about your business. So that's a real game changer for the travel industry today.
Seems like it's every nation for itself, not only on travel, but just on working with the virus, and critically, I know in much of the United States, on hospitalizations as well. With our first word news in New York, here's Ritika Gupta.
Morning, Tom, Francine. President Trump is finally calling on his agencies to cooperate in the formal transition process with Joe Biden. That follows weeks of inaction. The General Services Administration made it official with its acknowledgement that Biden was the apparent winner of the election. Still, President Trump says he'll contest the outcome of the vote. Joe Biden has turned to former Fed Chair Janet Yellen to be his Treasury Secretary. If she's confirmed, Yellen would become the first woman in the job. She's pushed for additional fiscal spending to help the economy get through the pandemic. Yellen's likely to win support from both Wall Street and the Democratic Party progressives. Meanwhile, a Michigan board has voted to certify the election's results. That practically ensures Joe Biden's victory over President Trump in the state. Only a possible Republican recount stands in the way of assuring that Biden will win Michigan's 16 electoral votes. The Trump campaign says it will keep challenging the results. And British Prime Minister Boris Johnson has confirmed that England's national lockdown will end next week. It will be replaced by a tougher system of regional restrictions designed to last until spring. Rules may be relaxed in time for Christmas. Johnson says that if all goes well, the vast majority of people who need a coronavirus vaccine will get one by April. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Interesting data today. And of course, leading it in equity lift. Futures up 29, 3604. Can't believe I'm saying that. SPX, I'm only doing this for Faro. 3604 on Standard & Poor's 500. Dow 29,864. Advancing in the last hour, up 320 points. The VIX doesn't give me a 21 yet, but we're right there. 22.03 on the VIX. Bonds don't play. I'm going to ignore bonds. Oil, thank you, Jeff Curry of Goldman Sachs, $46.56 on Brent crude. The dollar market, persistent weak dollar as well. I need to see some action there. Turkish lira weakening out, getting near an 8 level. Francine?
Yes, investors are cheering the start of U.S. President Biden's formal transition. The dollar is extending gains to the lowest since 2018. We talked a bit about travel stocks. Energy stocks are leading the Stock 600 here in Europe higher. Travel companies, banks also notching up gains in this broad advance. And overall, there seems to be less uncertainty in the U.S. election. That's something that a lot of markets are applauding. And then I'm also looking at, some of the good news on a COVID-19 vaccine. Reports that Janet Yellen could be named as the next Treasury, giving investors more confidence to pile on risk, Tom.
It's going to be interesting to say the least. I'm typing up a banner here to drive the story forward, which is what we like to do at Surveillance. We really like to do that with Kevin Cirilli, our chief Washington correspondent. Kevin, let me get out front of the announcements here. Vice President Biden, the president-elect, has a set of wonderful candidates for Department of Defense. I think, Kevin, you were on the short list to be acting Secretary of Defense here along with the rest of Washington over the last 2 years. Michelle Flourney seems to be the favored. Like Janet Yellen as Secretary of Treasury, are we going to see a woman as Secretary of Defense?
Look, I think in terms of getting out front and where the story is headed, whether it's her or whether it's someone else, I think the announcements that have trickled out over the past 72 hours, one, represent a policy return to the Obama years in terms of the centrist view of intelligence and diplomatic officials. This comes at a time in which Republicans and Democrats, but also Republicans, have questioned the current administration's strategy in terms of their relationship with the diplomatic and intelligence community, not at the top level, but also at the rank and file level. And that has sent signals all around the world. And so these names, and even the teams that come with these names, really do represent a career official type of strategy for those departments. Secondly, it's diversity. And I do want to talk about this. There are diversity in these picks and several historic picks in terms of the diversity glass ceiling shattering that were announced.
There's no question about that. Kevin, if we get the picks, which are maybe what we'll call younger Obama to invent a phrase, are we going to re-prosecute the debates of the past? I mean, obviously, Libya, Benghazi is one of them, but there's like 14 other debates you know better than me. Are we just setting ourselves up for a prosecution of events of years ago?
It's a really good question. I think that what you're going to see in terms of what's been going on with the litigation with regards to the elections might actually be issues that Chairman Lindsey Graham takes up. He's already said that this should be looked at, or Chairman Ron Johnson in the Senate, Republican-controlled Senate. Typically, as our audience knows, investigations at the congressional level do not carry the same clout as the judicial sector, and it's a lot of, for lack of a better word, cable news type of fodder in terms of the congressional investigation front. Secondly, is what I would note is that someone like Tony Blinken at the State Department, I don't think that he faces significant hurdles in terms of getting confirmed. Obviously, Janet Yellen, I don't think she sees any significant hurdles in terms of getting confirmed, simply because I remember back in 2013 covering her confirmation hearings in Dirksen with regards to the progressives that were really stepping in there in the Obama administration, and progressives got on board to confirm Janet Yellen, and I would anticipate that they'll do that again based upon conversations I had for Treasury Secretary.
Kevin, what will the president tweet about today?
I mean, maybe the turkey pardons. I don't know. I mean, look, I think, you know, last evening with the GSA announcement in terms of the transition, he's tweeted over the past couple of 12 hours, or over the past 12 hours, that he does not believe that that's going to stop his court angles from continuing, but as I've said, based upon my reporting, the agencies and whatnot have been continuing to prepare their transition binders and to move forward. Yesterday, additional Republicans, including Senator Rob Portman, a Republican of Ohio, joining Lisa Murkowski, Susan Collins, Mitt Romney, Pat Toomey, and I know I'm forgetting one on that list of Republicans, calling for the transitions. Oh, Kevin Kramer of North Dakota, a staunch Republican ally, calling for the transition process to continue, and these are Republican senators.
Are we going to have a lot more coming out? Or actually, now that he's kind of acknowledged that, you know, there should be a transition, Kevin, do we not care so much anymore about, you know, what the president tweets?
I think in terms of what you've noted, I mean, look, peaceful transition of power is a hallmark of American democracy. And so that in and of itself, I think, is from a tradition and a sombering tradition, is something that is deeply connected to American history. And so from that vantage point, this is unprecedented. Secondly, I've talked with many Republicans who believe that that any outgoing administration should be able to pursue legal cases fully to the extent of the judicial system. So that's also at stake.
Kevin, we usually don't do the gossip here, but it does fold into the Bloomberg world and someone we've talked to many times.
Everybody gossips around Thanksgiving.
No, I know they do, but seriously, the other, I guess yesterday, maybe the day before, Mr. Trump took a call from Steve Schwartzman. I mean, I can just see it. Steve Schwartzman on line 2. Did Steve Schwartzman affect this transition?
Well, look, I think as Hans Nichols over at Axios broke that story, and I think that he pointed out, is that there have been prominent members of the business community who have really been pressuring the administration to get on board in terms of this. But I would go one step beyond that. The Business Roundtable working even weeks before that with the Biden transition team. And look, the business community has really been taking a more stoic approach to this and communicating with regards to all around the world. Israeli Prime Minister Benjamin Netanyahu also acknowledging the victory as well.
Yeah, really interesting. Kevin, thanks for a terrific brief. Kevin Cirilli, our Chief Washington correspondent here. These are exciting times. We'll drive forward that discussion, qualified on Janet Yellen, qualified on the Biden administration and their approach to the debt, the deficit, and policy. Jason Furman of Harvard. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
She's obviously someone who knows Washington policy pretty well. Chair of the Council of Economic Advisors, chair of the Fed, and now Secretary of Treasury.
I'm hoping Janet Yellen takes a page from good Treasury secretaries like Jim Baker or Robert Rubin. Even Alexander Hamilton, get a musical play named after her.
She would be inheriting this Treasury position at a really difficult time for anybody in that position. So we're far from over. These are sobering times for banks, for the markets generally, for individuals and corporations.
She's going to be much more subject to the political winds in Washington. And for all her esteemed accomplishments, I don't know that we know how well she can navigate those political waters, choppy as they may be.
The financial markets, banking, regulatory, these have never been her forte. Remember, she's a University of California, Berkeley trained labor economist. And I think that is where the greatest appeal is.
Governor Krosner there with important comments on Chair Yellen. Jason Furman scheduled to join us here in a bit, and that'll be an important moment to get perspective on Chair Yellen as Secretary of Treasury. Right now in the markets, with futures up 317 points, 29,863. SPX up a good 30 points, 3605. Stocks to the moon. Christopher Morangi, Gabelli Funds, Co-Chief Investment Officer. Chris, I'm going to suggest you and Mario have had a spectacular 6 weeks. Am I right that the kind of Gabelli stocks are the ones that are advancing right now?
Yeah, absolutely. Value and small cap has made a pretty stunning comeback in these last few weeks since the election, and we'd expect that to continue.
Well, come on, you got to give me a longer answer than that. I mean, you expect him to continue. Where is the second leg? Is it in small cap? Is it in international? Is it in selected sectors that you and Mario beat to death?
Well, it's probably in all the above. Obviously we had a lot of companies, cyclical companies uniquely impacted by COVID that are still down, still lagging the broader indices this year. And as we get further clarity on the political picture and the COVID picture, we'd expect them to recover. While we might see a second leg down in the economy, the market's going to look through that to a more sustainable recovery sometime in 2021.
Chris, is all the good news now priced into the markets?
I don't think so. It depends stock by stock. Certainly the market caught on early to this fundamental shift in the way we work and play, entertain ourselves. And so a lot of the COVID stay-at-home names like Netflix and Zoom and big companies like Google and Amazon have done quite well. And I think most of that good news has been priced into the market, but I think the market took a little bit more of a cautious approach to some of the travel and leisure companies, banks and oil. Mario's called them the bottle stocks: banks, oil, travel, and leisure. And again, as we get a clearer picture of what the trajectory for reopening looks like, we got more confidence to price those more normally.
What does inflation trade, reflation trade actually mean for some of these equities?
It's a good question. We've been talking about inflation for the better part of the last decade, and just haven't seen it, obviously. But I think given the orgy of fiscal and monetary stimulus that's happened and is likely to come, in addition to significant pent-up demand, which is likely to exhibit itself in the coming years, we're probably in the best position to actually see some inflation that we have been in a long time. So, again, that certainly helps companies, helps equities, helps companies with pricing power, and those are many of the companies that we're very focused on.
Chris, I got 8 ways to go here. And I guess I got to go back to Mario's great affection and your path-breaking work. I think of Gordon Crawford folks at American Funds Capital Group is sort of the same angle. On wisdom on media, part of the media thing is to get a big 5-year, 10-year view. Do you guys have a 5-year view on media, or is it every streaming service for itself?
Well, media certainly has, it was one of the first sectors to be dramatically impacted by this explosion in new ways of doing things. So it's hard to take a 5-year view on a lot of these. Yeah. I think certainly one of our core views has been that connectivity is king. I've talked about on this program the broadband hedge. That is, no matter what service you use, no matter what content you consume, you need broadband to do so. And in most of the U.S., at least, that's provided by the cable companies. The companies formerly known as cable companies, now known as broadband infrastructure companies. And so that's been a successful investment for us. We think none of that really changes in the next 5 years. Obviously, we're always looking for changes in regulation, but don't think that will be meaningful. As far as on the media side, the content side, this is a great time to be a consumer of content. There's plenty of it. And the question is, how do you organize it and with so much content? And there are emerging players who are doing that, including Amazon, which is building a very formidable channel store for itself.
Chris, I look at the distribution. Comcast is one example, Spectrum and the others that we know in the Northeast. Fine. 10 other names I don't know. Aren't we cable cutting? Or are you saying they will still win away from cable with broadband?
Yeah, that's been exactly the play over the last several years. That is, a customer taking video from cable or satellite the cable companies are making 40 cents on the dollar, whereas with a broadband customer, they're making, close to 80, 90 cents on the dollar, depending on how you count. So, those broadband customers are much more profitable, and the cable company would much rather sell you faster speeds than sell you a bigger video package.
Chris, thank you so much. This has been really good. Chris Morangi with us with Gabelli here what a good point to have Chris on. Dow futures up 29, SPX futures up 29, Dow futures up 312. Comcast has been a terrible investment. Cable TV is going to die. 17.8% per year for the last 10 years. I mean, that's the reality as well. Let's see now. The dollar, weaker right now. Cass Sunstein coming up with Bloomberg Opinion, of course, with Harvard, one of my books of the year a number of years ago on impeachment. Cass Sunstein right now on the events forward in Washington. This is Bloomberg. Good morning.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. BlackRock is betting on the future of personalized index investing. The world's biggest asset manager agreed to buy Aperio, a creator of tailored index strategies that are popular with the rich. The price, a little over $1 billion in cash. Aperio is owned by private equity firm Golden Gate Capital and Aperio employees. Goldman Sachs is planning a European stock trading platform in Paris. The aim is to make sure clients can still buy and sell shares, even if there is no post-Brexit agreement to allow dealing in London. Goldman has asked French authorities for permission to start in January. And it's a major shift in a fight that has fractured the American auto industry. General Motors will withdraw from the legal battle between the Trump administration and California. GM had backed the administration's attack on the state's ability to set tougher emissions rules. GM now says its goal of speeding adoption of electric vehicles is aligned with Joe Biden's support of cleaner cars. And that's your latest Bloomberg Business Flash. Francine?
Thank you so much, Ritika. Now, we're just getting a little bit of breaking news on the vaccine. We understand that the EU Commissioner and the President of the Commission, Mrs. von der Leyen, will announce an agreement with Moderna on the possible supply of the COVID-19 vaccine. And we also understand that the deal with Moderna, if it's confirmed, but we understand through multiple sources that it should be confirmed, would mark the Commission's sixth such accord with drug companies. Again, we're expecting Ursula von der Leyen to talk about this accord a little bit later on at 12:45 p.m. in Brussels. That's in 20 minutes from now. In the meantime, global stocks advancing for a second day. Investors cheering the start of U.S. President-elect Joe Biden's formal transition and the prospect for more economic stimulus. Haven assets broadly weaker. Bitcoin actually extending its searing rally, surpassing 19,000 for the first time since 2017. So Tom and I will talk a little bit more about Bitcoin going forward, but really it's the travel companies that are notching up gains. EasyJet, our International Consolidated Airlines Group also, both rising after England planned to cut its quarantine period for arrivals from high-risk countries. So we'll have plenty more on some of the travel industries, what it's been grappling with, and of course, Janet Yellen at Treasury in the U.S. Coming up next, Jason Furman, Harvard professor and former chairman of the Council of Economic Advisors during the Obama administration. We'll talk to him about Janet Yellen. We'll talk to him about stimulus. This is Bloomberg.
Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen.
Market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis. But the fiscal support has now lapsed. It is not their objective ever to directly try to help the federal government finance its budget deficit, and that would be a very dangerous kind of support to provide. But I do expect, I think asset purchases have worked. They're holding down longer term rates, and I expect there to be ongoing purchases, but probably not geared to the federal deficit.
Chair Yellen, and let me make clear here, and I rarely say this about the videos that we show, but she was beyond fired up and razor sharp in that interview of October 19th. When the news broke yesterday afternoon, members of the entourage called me and I said, get Jason Furman. Why do I do this? Because without question, he was the best looking guy in his dorm, even with Matt Damon hanging around, but far more because of his economics and Furman's pedigree and heritage of policy and discussing of policy. Dr. Furman joins us now, teaching Ec 10 at Harvard. And long ago and far away, Jason, you had to sit across a desk nervous with the fiery Yellen, I believe, at the Council of Advisors. What was it like being in a room doing economic or treasury work with Janet Yellen?
Yeah, so my very second job in economics was at the Council of Economic Advisors, working for Janet Yellen, and she was amazing. She came in from the central bank. She'd been a governor at the Fed, obviously a great grasp of macroeconomics. She leapt right in on the issues we were dealing with. One of the biggest ones was climate change. She mastered the topic and was a driving force in that as well.
Many would say that Secretary Mnuchin, with a very different background, really found himself with this pandemic. His voice changed, his act changed. It was a new Secretary Mnuchin. How would you expect the economist to deal with politicians looking for FaceTime on the evening news? How's she going to deal with the junior Republican from Arkansas or the senior senator from Montana?
Janet is somebody who speaks clearly, speaks plainly, and it's clear she's motivated by sincerity. So, her mode is more substantive persuasion rather than, going out for a drink with a senator. And I've seen that work with a lot of people. Now, some people don't want to be persuaded. Some people don't want to be engaged on substance. I don't know that a beer would bring those people around either.
Jason, what exactly, do people not understand about what Janet Yellen can do? How big can the stimulus package be? Will she be able to reach across the aisle and get it done?
My hope is that it gets done in the next month so that is not on the desk of the next president. That's not on the desk of the next Treasury Secretary. But, where she could be important is if it hasn't gotten done, being clear about both the economic importance of it, but also allaying some of the concerns about the fiscal impact. She understands we're in a time of low interest rates, that we need to change the way we think about both monetary and fiscal policy in this era of low interest rates. That's something that not all policymakers and even fewer members of Congress have caught on to. It's absolutely critical to everything, and she'll be at the center of it.
So, Jason, what would a policy mistake actually look like?
I mean, on the stimulus, a policy mistake would look like not doing one. And, it's going to take a compromise. And so you can't say, I propose this, I'm only going to do this. Democrats are going to have to move to get something done. I think Republicans are going to have to move to get something done. Sometimes that takes an adult to say, you know, you wanted X, 1/2 X is a whole lot better than 0. Even if politically it doesn't look great, let's do it for the sake of the economy. So I think adults that are focused on economic outcomes can help negotiation and compromise, see what's good and what's important.
Jason, will we see panels to save Social Security, panels to save this, panels to save that? Is there going to be a bigger, broader picture out there to study intractable challenges 5 and 10 years out?
Yeah, Tom, I mean, we have to get through the challenge that is 1 day, 1 month, and 1 year out, which is we're still in a deep recession. But yeah, Social Security solvency date is a little bit more than a decade in the future. And I think that's an important conversation to start now. I think we should do it more with revenue than with spending, personally. But, start the discussion now. Absolutely.
Yeah. Jason, David from Ec10 at Harvard emails in and says, ask Professor Furman if he's going to go serve in the administration. Cut to the chase. You can announce it here. What are you going to be doing for Chair Yellen or someone else under President Biden?
This spring, I'll be teaching F10B and look forward to having him in class here at Harvard.
Very good. And a tough grader. There's loads of C grades. It's an appalling structure that Furman, it's like worse than Roach at Yale. I mean, to be honest, folks, Roach is the toughest grader in the Ivy League, and Furman's taking him out with loads of C minuses. Jason.
No, we welcome all students.
Yeah, they all get A's. Okay, that's another story. Jason Furman, when we look at the policy there, we go back to, say, Heilbronner and the debt in the deficit, to Pete Peterson, to Paul Tsongas and others. How out of whack is our debt and deficit right now?
It's not very, Tom. I mean, you don't want to compare your debt to where your GDP is right now. You can pay your debt off over time. Interest rates are lower. That means the debt accumulates more slowly. That means the present value of GDP is higher. And, on that basis, our debt is actually small. Just look at what we're paying in interest on the debt. It's low and it's falling over the next few years.
Jason, where does, if we get a stimulus in the U.S., where does it need to be spent? We sometimes forget that, and the market is certainly very buoyant about the fact that it's familiar faces that are now in the administration, that we go to, what happened before President Trump. But it was before President Trump that people actually wanted a change. 70 million people in the U.S. still voted to have, Trump and his policies. How does the new administration bring people together, bring people closer on an economic level?
Yeah, I mean, part of it is getting the economy going in a better direction. And that's providing immediate relief to households, for example, through unemployment insurance, relief for states, and most importantly, money for things like scaling up testing. But then there's what the president-elect calls building back better. This isn't just pointing the economy in a better direction in 2021. It's building on infrastructure, green energy transformation, investments in children, child care, preschool. There's a whole ambitious agenda. You're not going to be able to get that entire agenda done, but you have to figure out how to get as much as it possible. And I think that they'll have a bit of a tailwind from a stronger economy in 2021, which will help with other parts of the agenda, I expect.
How much of a green agenda will actually be a shock to a lot of people? It's, jobs lost, and you create new jobs for which you need training. What can the government in the U.S. do to make that transition smoother and with less pain?
Yeah, I mean, ultimately the right answer here is a carbon tax. Give the money back from the carbon tax directly to people. You can make the majority of people better off in that transaction. In the interim, there's a set of things like, for example, putting electric vehicle charging stations so that we can shift people over to electric vehicles. That in some ways is, could even be a net job positive. Hardening our infrastructure to deal with climate change, more investment in wind and renewables. The price of coal needs to go up a lot. The use of coal needs to go down a lot. I think it'll be harder to do that part of the agenda in the next year or two, given Senator McConnell, but there's a lot of other parts of the agenda.
I mean, Jason, that's a good place to go here. And it's a little bit off the remit today, but let's go there right now. We have an envoy for climate in John Kerry. Folks, I did a panel with Secretary Kerry in Davos, and I can't convey how astute he is on the numbers at hand. The mother of all debates, Jason Furman, as you identify, is some form of price on carbon, some form of auction of emissions. Are we anywhere near that?
We're nowhere near it until all of a sudden we're there.
Agree.
I think of something like gay marriage, where it was inconceivable, 1 year, and a year later, it was the law of the land in the United States and around a lot of the world. Things change quickly. It's such a rational solution. You can give people the money. You can reduce a lot of regulations. I think a number of companies will find that appealing. Have this one simple thing instead of all these complicated rules. I think border adjustment will help. As some countries do it, they'll border adjust against others. That will push the others into it.
Okay, but Jason, cut to the chase. How is it going to harm a Republican hydrocarbon America?
Coal is the big issue. It would be a big price increase in coal. It would be a big reduction in coal. Coal is concentrated in a few states. You need to do something for those states. You need to do something for those workers. It's going to help natural gas over a decade or two as people shift from coal to natural gas. Actually doesn't have a whole big impact on oil, at least up front. But it's something in the United States. You're talking about 2 or 3 states that you really need to do a lot for to make it work. But most of the hydrocarbon economy even actually isn't affected in the next 2 decades.
This has been great. Jason Furman, thank you so much for the brief. Please call us first when you figure out what you're going to be doing after the spring term of EC10.
EC10A next fall.
Yeah, do that, please. Jason Furman, thank you so much, of course, with Harvard. In New York City with our First Word News, here's Ritika Gupta.
Thanks, Tom. The formal transition of power between Donald Trump and Joe Biden has finally begun. The General Services Administration has acknowledged that Biden was the apparent winner of the presidential election, and President Trump has called on his agencies to cooperate. Still, the president says he'll continue to challenge the outcome of the election. Joe Biden may have found a Treasury Secretary nominee who can appeal to both bankers and liberals. Wall Street is likely to support former Fed Chair Janet Yellen because they fear a more provocative pick like Senator Elizabeth Warren. And progressives were concerned that Biden would pick someone too friendly to the big banks. If confirmed, Yellen would be the first female Treasury Secretary. Senator Dianne Feinstein will step down as the top Democrat on the Senate Judiciary Committee. Feinstein is 87. She's been criticized from both the right and the left over how she dealt with President Trump's judicial nominees. Illinois Senator Dick Durbin says he will seek to replace Feinstein as the ranking Democrat on the committee. And Bloomberg's learned the UK may ban the installation of Huawei Technologies' 5G equipment as soon as next year. That's to appease lawmakers pushing for tighter restrictions on the Chinese telecom gear maker. The US has urged allies to exclude Huawei on the grounds of its closeness to the Chinese government is an unacceptable security risk. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Ritika, thanks so much. Under construction, 57th Street and 5th Avenue, Tiffany's. And, of course, they're going to be under construction with a presumed merger here with the French. Tiffany's out with a very nice beat. What I noticed is, one, gross margins due 200 basis points better than expected. That gets my attention. And also a single headline off the Bloomberg sales in mainland China. They continue to grow. And there's an adverb, dramatically, so maybe light. Tiffany's been elevated here, but lots of noise there around the LVMH transaction. Coming up on the pandemic, a good update from Amesh Adalja of Johns Hopkins Center for Health Security. Stay with us. This is Bloomberg.